morning and welcome to the 3-day workshop on GST. So far, SARCF ICA has conducted 19 batches and trained more than 3,000 delegates, which includes the members, non-members and students. This is the 20th batch. The first speaker, CAPT Raju, he will take us through GST overview and levy, provisions relating to scope of supply and time of supply. Raju is a fellow member of our institute and is a partner in a leading firm at Chennai. He is a qualified both chartered accountant and a company secretary, and he has also completed his bachelor's degree in business administration with the first rank from the University of Calicut. He has also secured scholarship from ICAI throughout his CA course for his merit in academics. He ventured into professional practice after successful employment stints in the Audit and Assurance Department of a Big Four firm. He has specialized his practice in GST and is providing GST advisory services to some of the big business conglomerates in India, having over 50,000 crores annual turnover. He is a regular speaker in the in-house training of the firm, and he has also presented papers on GST in various business forums and MSME associations. He has conducted many corporate trainings on GST to impart the knowledge of the biggest tax reform in India. Please put your hands together to welcome the speaker. I now request the speaker to occupy the dais. Before we move on, let us rise for ICA motto.
सुप्तेषु जाग्रति कामं 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 कामुषो पुरुषो निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तनूनात्यमीतश्चन
Thank you, delegates. Over to Rajesh.
So very happy morning to one and all present here. Yeah. So first of all, thanks to Mr. Rahman for having a wonderful introduction, and I'm surprised to hear that it is a 20th batch, and I'm fortunate enough to be part of this successful program, I think from the inception. So it makes us very proud to stand in front of all of you, and this program, as all of you are aware, is a successful program. Still we are having good number of participants, and except in September 2018, obviously all of us were busy with the tax audits and other things. Otherwise all batches were very full, and then it was a wonderful journey for all of us, including all the speakers, and for SARC to impart the biggest tax reform in India. So today my topic is, I am fortunate enough to handle almost all topics of the successful program, and including input tax credit, valuation, all topics, major topics. And this time the institute has excuse me, entrusted with supply, levy, and the last topic is time of supply of goods and services. So before getting into the topic, I used to say every time that this should be more kind of interactive session, and so that all of us can take away a lot of things. To be very honest, whenever complete my session in the institute, I used to learn a lot from the participants, and sometimes we have to dig deep to understand what the question is all about, and we will find a solution also. So it's always a rich experience talking to our professional colleagues, senior members of the profession and veterans in the profession, and on the topic of GST, various topics of GST. Now, before getting into the topic, let me just ask you a simple question which has nothing to do with the GST. What is the difference between knowledge and experience? Can anybody throw some light on this? What is the basic difference? It's not nothing to do with the GST. What is the difference between knowledge and experience? Can anybody? I want you to open your mouth. That's why I didn't ask any GST questions in the beginning.
Knowledge is theory.
Knowledge is theory. Okay, very good.
Everything is practical.
Experience is practical. Okay, can anybody give some other diversion to it?
Through experience we'll get knowledge.
Experience?
Through experience we'll get.
Through experience we'll get knowledge. I'll give you a simple example. If I teach you today how the sugar will taste, if I teach you that how sugar will be sweet, sugar will be sweet, sugar will be sweet, I will teach you for 100 times. Will you be able to get the experience of the sugar unless otherwise you taste it? Correct? And you take a small kid, ask him, son, there is a fire, don't touch it because your hands will burn. The kid doesn't know what is burning is all about, right? When the father goes away, kid will go and touch the fire. In lifetime, he will not try this adventure after that because he got an experience, right? So that is all about. All of us would have gone through this. So my duty today is to provide you some knowledge and at the same time take you through the experiences. So we are very fortunate enough to get a lot of experience on GST because we are pushed into it. I would put it that way. Because all our clients, anybody for that matter, all our clients, once the GST got introduced, they were all behind us. Whatever the doubts they are having, they will call us. I'm sure that all the other chartered accountants would have also faced it. So whether you are update or not, you yourself is updating or not, they will push you into the practical experience. Obviously you have theoretical knowledge, but at the same time practical knowledge is very, very important. Why I'm saying this is, when we get different questions or different problems from the industry, we first analyze what are all the applicable issues and all. When we come up with a solution, that is a technical solution. Once we give the technical solution to the management, the way they are coming back with the factual changes would be amazing. So you would not even thought of that kind of dimension to that particular problem. So I'll take you through whatever the limited exposure which we got on the topic GST, and we will also share some of our thoughts. And I'm sure that I'm not insisting all of you to take our views because everybody is having the right to have their own views. There is no problem because you can have your own views. When even we are all disputing on some matters, sometimes it is going to the Supreme Court. Why? Still there is a dispute. Ultimately Supreme Court has to give the judgment to come to the conclusion. So I just wanted to know, before getting into the GST topic, how many of you are from the industry here? Just wanted to understand how many. Is there anyone from the industry here? Industry? Okay. I hope that rest of all students and then the senior members of the profession. So all of us are aware that what is GST, right? Now I don't have to explain that because we have traveled a lot. 1.5 years we traveled, so I don't think introduction is required on GST. We know that the constitutional amendment was required for bringing GST into the applicability, and then they introduced it. After the introduction, they made the laws, that is CGST law, SGST law. SGST law, obviously everybody knows that, all the states are having their own state laws. Central Goods and Service Tax law, CGST, SGST. Then we have IGST. For all the interstate transactions, we have IGST. Then we have compensations as Union Territory Act, etc., etc. Now, my point is, this Union Territory Goods and Service Tax Act, is it applicable to Pondicherry? Pondicherry is a union territory, right? Correct? Pondicherry is a union territory. Delhi is also union territory. Andaman Nicobar is a union territory. But UTGST is applicable to Pondicherry? Or is it applicable to Andaman Nicobar? Andaman Nicobar? UTGST, anybody? Is it applicable to Pondicherry?
Pondicherry and Delhi are coming under SGST. They have their
Why SGST, sir? Because it's all of us sitting here know that they are union territory, right? So of course, yeah.
They have attained partial statehood.
Sorry?
They have attained partial statehood.
They are?
They have attained partial statehood. So they are.
They have their own assemblies.
Yes, yes.
Absolutely, yeah. That's a point actually. See, as per CGST Act, the definition of state includes state and union territories where they have a legislation. That means if the union territory can pass a law, then they are also part of state. That is why UTGST is not applicable to Pondicherry and Delhi. They have their own, as Sir rightly mentioned, they have their own state SGST. Okay. Now, I just wanted to understand, I thought we will have some sort of brainstorming before getting into the main topic. In GST, with your last 1.5 years experience, let me ask you, only supplier is liable to pay GST. How many of you agree with this? Only supplier is liable to pay GST.
no, sir.
Yeah.
You have recipients also
Yes.
coming under RCM.
Yes. Anybody means, right? Agree? They are having canteen because it is mandatory as per the Factories Act. If you are having more than 250 employees, you have to have a canteen. Canteen, what they are doing, is it out of their employment? No, it is not based on their out of their employment contract. So there was a issue. There was a company called Caltech from Kerala. They applied for an AR ruling to understand whether it is a supply or not. Caltech AR ruling, Kerala AR ruling authority said, yes, it is a supply. Yes, it is a supply. So, now the challenges are how to find out the value for that. First issue, is it a supply? Yes, it is a supply. Value and how the ITC has to be taken, etc., etc. Because that AR ruling, Authority for Advanced Ruling, Kerala, that was a simple judgment. But if you go in detail, because we have analyzed for one company, I will let you know the issues which have come across in that. This company is located in Sri Perambatoor. They are having a canteen as usual. They are having around 1,000 employees working for the manufacturing unit. Out of 1,000, 500 employees are contracted employees. Please be careful. Contracted employees. I don't call it as employees. It's only for the namesake they are calling it as contracted employees. Remaining 500 employees are in the payroll. Now, that canteen, even if we are going for a consultation, they will give the food from that canteen only. So, outsiders will come and eat the food. Contract employees will come and eat the food. Normal employees also come and eat the food. Now, this has come to our point that they are collecting 1 rupee per day from all the employees for a namesake. So it will be 26 days working days. So they will be collecting 26 rupees per month. Now, is it a supply? Yes, it is a supply. There is no doubt. Now, how to do the valuation? for this particular transaction. Valuation, the moment you talk about valuation, you have to go to section 15. 15, if it is an employer and employee are related as per explanation to section 15, because of that you have to go to rule 28. Rule 28 says open market value. Can you tell me what is the open market value for the food which is provided in a canteen? One meal in 10 hotels, if you go, it will be 10 rates. If you go to Samhita, it is different. If you go to Sharanabhavan, it is different. If you go to Amma Hotel, it is entirely different, right? So you cannot take the open market value. It was very difficult for us to substantiate open market value, that too in Sriperumbudur. So if you come down in that rule 28, the second proviso to that particular rule says, if both the parties are related, if the recipient is able to take full input tax credit, I will underline the word full input tax credit, whatever you put it in the invoice will be the open market value. So there is an open market value which is required. If you want to take open market value, either you get the open market value or second proviso save you saying that if the recipient is able to take full input tax credit, you can take whatever they mentioned the value. So we analyzed it. 1 rupee, 26 rupee invoice, chalo, finished off. But employees are not able to take the full input tax credit because they are not registered, right? So that proviso will not stand. Then you have to come to 29, that is for agent and the principal. 30 says, if you don't find the value based on 27, 28, 29, I will give you the value. That is, what is that? Cost plus 10%. Cost plus 10%. How do you find the cost? We found that each month the canteen service bill is almost 1.5 lakhs. 15 lakhs. 15 lakhs, 1.5 million. We added it. It was coming to around 1.8 crores. We took 10%, 110% of that, that is 10% margin we added, and we told that this will be applicable. Now the question is, it is not only for employees. My contract employees, are they related to me? Out of 500. So, when you go further down, you have to see whether they are actual employees. They are not your actual employees. So, you can take half of it. Because I am giving a practical scenario where it is little, obviously department is not going to accept all this. Department will say, no, they are also your employees. Then we have to fight it out. But it is a little litigation prone area, but we have taken a conservative stand, or we would put it this way, aggressive view, and saying that yes, they are not our employees. So I can substantiate that with the payroll and then the attendance register. It's not exactly 500, I am just taking it for the computation purpose. Now, that 1.8 crores become 90 lakhs now. Now the next issue. We were debating with the Director of Finance saying that, sir, you have to charge 5%, no input tax credit. Because caterers would have given you 18% input tax credit. You cannot take input tax credit because you are coming under 5%. So Director of Finance said, no Rajiv, I will do one thing. I will also charge 18% and I will take input tax credit. Whatever 2 months, 3 months interest, I will pay it off. No problem. Is it possible? I said no, it is not possible. It is not your right or it is not your option to charge at a higher rate, because rate has been given. You can charge for canteens, you can charge only 5% without input tax credit. He asked me what is the problem. I substantiated saying that there was a cafe coffee day AR ruling, same provisions. They wanted to charge 18% and take input tax credit, but AR ruling authority said no. When there is an actual classification which is available, you should go with that, not with the other one. That is ruled out. Now 5% tax has to be paid, input tax credit completely blocked. Now, further point. They said, initially when I said, we were discussing at that time, I said, sir, you are collecting 1 rupee, that is what I understand, so this would be the implication. So at that time, obviously they will come up with a constructive argument. He said, Rajiv, that is, you put it this way, that is not for the recovery of that is not the recovery for the food. I will consider it this way, for the maintenance of canteen. Will it be applicable now? I said, sir, now you are putting one more option to the department because you are providing food, no consideration required, taxable. Now you are also saying that canteen service, maintenance service I am providing to employees, I am collecting 1 rupee per day. That means again you are making it complicated. That will also come under taxation, correct? Now initially it was only one service. Actually the collection is for the food only. Now he is saying that no, that is for the canteen maintenance. Again it is complicated. I said, you want one tax or you want two tax? You are complicating it. So he said, okay fine. No, that is for the employee food recovery only. Because the moment he says that, there is one more service which is being provided by the employer to the employee, that is canteen maintenance services. Again section 15 will come, schedule 1 will come, section 15 will come, again valuation will come, 30%, 10% of that will come, that is under rule, again complicated, so 2 taxes. So he said no, we will stick to this, we will take the call accordingly. So see, one canteen service itself, see the complications involved in it, it's not that easy. When we discuss across the table, it is very easy, but it is not easy. And what are all the other services which are prescribed under schedule 3? Exempted we already discussed, first one. Second, any services provided by the court or tribunal, it is exempted. Okay, exempted means it is in the schedule 3. Now we come back to schedule 3. Schedule 3, one is employee, employer. Second is any services provided court or tribunal, etc. Third is any services provided by MPs, MLAs or panchayat presidents, etc. or any director of any director who is holding the position in the capacity of any law for that matter. Say for example, tea board or coffee board or rubber board and all, they will have a chairman or there will be director. They are neither MPs or MLAs or something like that, but they are providing services to the company, so that is exempted. Now further going down, it says funeral services are all exempted, so that is also exempted. And then the fifth one, so we said employee, employer. Second we already talked about what? Sorry, court services. Third is MP, MLAs and all. Fourth one is funeral services. Any services provided for the funeral, it is exempted. Fifth one is land and building. Land and building are exempted under GST, provided the transaction happens after obtaining the completion certificate. Sometimes the builder, see for example the flats are being sold in the market, right? They are charging GST at the rate of 18%. How many of you agree 18 or how many of you agree for 12? Is it 18 or 12?
18 without land.
18 or 12? It is actually 18%. If you look at the notification, rate notification, that is for the services, construction service 9954 classification, they are saying rate is 18%, still it is 18. But on the bottom, you can see for the valuation purpose, value will be 2/3. So assuming that your value for that particular entire construction of one particular flat is say 33 lakhs, government says I will tax you 18% on 22 lakhs, not on 18 lakhs, not on 33 lakhs. Clear? So they are not tinkering with the rate, they are tinkering with the value. 1/3 is assumed to be the land value. Many people have asked me, no Rajiv, how can you take it as a unanimous one, because rate of land rate will be different in Nungambakkam, land rate will be different in Perimbakkam. That will further complicate. Already we have issues in income tax where they are saying guidance value, etc. One case I have come across where they were saying that from Chengalpet to Sriperumbudur highway, that is around 50 kilometers highway, the guidance value, when I went to the website, it was a different rate. But on the roadside it will be different, inside it will be different. So without complicating, they said 1/3. That is the value of the land which we assume. So this is being given. So this is the fifth one, land and building is exempted provided they are sold after getting the completion certificates. Now, this was the first initial schedule 3. Now schedule 3 they added 2 services. There are 6 already we discussed, and then 2 are there. One is, you heard about merchant trading, right? That is, I'm sitting in Chennai, I'm asking a company in US to sell some bearings to Japan. I'll repeat, my company is registered as an Indian company in India. I know how to do trading abroad. I am asking US company to do a supply of bearings. Bearings is nothing but it's used in everywhere, in fan also. Wherever there is a rotation, that bearings will be there. So they sold it. I will charge I will say, for example, I will raise my invoice to him, to my customer in Japan, and then the USA will raise invoice on me. Is it an import or export? Is it an import or export? You understood the example, right? I am sitting in Chennai, I am asking US company to sell the bearings to Japan. Is it an import or export? Or both are there? Both are there. How many of you say both are there? Both are there, right? Yes, sir. Sorry, sir? Both are there, very good. See, basically, I appreciate your replies, but please understand, under IGST Act, import and exports are being defined. What is import and export? Taking goods outside India from India. Import means importing to India from a place outside India. This is the definition. In this transaction, is there any goods which are taken from India to outside India? Yes or no? No. So it is not an export. Is there any transaction for importing the goods from abroad to India? Is there any goods are being imported? No, right? So this is not qualified to be an import or export of goods. Then what is this transaction is all about? High C sale is little variant of this. I will explain that. It's a very good point, sir. See, it is actually a transaction which has happened abroad. Now, there was a lot of confusion on this particular transaction. Subsequently, in the First Amendment Act, they inserted this particular transaction into the CGST Schedule 3 of the CGST Act 2017 and said, this is not a supply of goods, that is neither supply of goods nor supply of services. In some of my sessions, when I explained this, some of the participants asked me, sir, then what will happen in the income tax? That income tax will take care of it. GST will not be having any impact, but income tax, you have to pay income tax on this. There is a profit which will be arrived, on that you have to pay income tax, but GST is not applicable. Now, let's come down to the last one. The last point, 8th point of the Schedule 3 of the CGST Act 2017, which says, as you rightly mentioned, high C sale. That is what? Now, what we have seen in the first example is goods going from USA to Japan. I am sitting here. There will be some scenarios where I will be sitting in Chennai. My goods would have been departed from the port of origin port, would not have crossed the custom frontiers. Before clearance, home clearance, it would have gone back. I will make a sale. Say for example, it is imported from USA. Before home clearance, I am selling to Sri Lanka for a customer. I got a new customer. I said, no, don't bring it to India. You bring it to, you send it to Sri Lanka. This is called high C sale, as sir rightly mentioned. This is called high C sale. These transactions are also exempted now. This is neither supply of goods nor supply of services. Last one. They said inbound transactions. What is inbound transaction? Now we have seen first transaction, USA to Japan. Second transaction, it is departed from the port of origin port, but it has gone to some other country. Third one is, it is imported into India. It is already reached at the Chennai port, but I have the right or privilege to keep these goods in a bonded warehouse. There is a bonded warehouse in Madhavaram. I've got an opportunity to visit that also, where they will keep it. you don't have to pay duty for keeping there. Obviously, warehousing charges will be there. What do you do? Assuming that you imported those goods for a client called Sundaram Fastness, which is located in SCZ. Now what happens? If I am importing, I am located in Mylapore. If I am importing, I have to pay import duty. Then I have to sell it to him where there is no outward duty, because it is a SCC, it will be zero rated. So I am the loser. So government said no. You keep it in the bonded warehouse. Whenever the SCC unit wants that goods, you file a bill of entry and take it. Okay. So now what happens? I am saving my skin because there is no cash outflow to me. So this is called bonded warehouse. That is in bond transaction. This is also exempted under GST now. Now there is two issues in this. Now the moment you say it is coming under Schedule 3, you have something called, this is called exempted supply. Why exempted supply? If you go to CGST Act for the definition of exempt supplies, exempt supply says, exempt supply means which is nil rated or which is not taxable. Nil rated or exempted by way of section 11 of the CGST Act, wholly exemption, not partial exemption, or non-taxable. If you go to non-taxable definition, it says not leviable to GST. So alcoholic for human consumption, that is not leviable to GST. It is an exempted supply. Section 9 subsection 2, petroleum products, 5 products we discussed, that is also exempt supply now because non-taxable, not leviable to GST. Third is Schedule 3 transaction which are not leviable to GST, which is a exempt supply. Now the moment you mention that it is an exempt supply, section 17 of the CGST Act will come into the picture and says, boss, you are doing exempt supply, reverse your credit based on rule 42 and 43 of the CGST Act, CGST rule 2017. Did you understand the implication of all these transactions? Because once I say Schedule 3, I have to correlate everything, otherwise you will not be able to appreciate it. Now, one of our clients' case, they had some high C sale. As you rightly mentioned, there was a high C sale. Now, do they need to reverse the credit? First argument was, it is actually explanatory in nature. This addition in Schedule 3 is explanatory or declaratory in nature. Hence, it is applicable with retrospective effect. First argument. School of thought says it is explanatory in nature, so it is applicable with effect from 1st of July 2017. Second school of thought says, if you look at the first CGST Amendment Act, just before Schedule 3 amendment, Schedule 2 amendment was there, where they clearly said this will be applicable with effect from 1st July 2017. We already discussed Schedule 2 amendments will be applicable with retrospective effect. But Schedule 3, they deliberately ignored the word applicability with effect from 1st July 2017. So, this will be prospectively be applicable. These exemptions which are being prescribed here will be applicable prospectively. But irrespective of that, high C sale will come under exempt supply. Now, what is the issue here? Why are you trying to include into Schedule 3? Because section 17 now has been amended, saying that exempt supply means you don't have to reverse the credit. You don't have to reverse the credit except for one item where there is a land and building. Land and building, you know that the construction of flats, once you get a CC, it will become exempted. Except that case, you don't have to reverse credit. That is an explanation which is inserted in 17. Now question is, high C sale, do you need to reverse credit? If you look at the practical aspect, when one company where there was a turnover of 1,000 crores, when we calculated their high C sale was hardly 5 crores. The impact was hardly, if I remember, it was 40,000 or 50,000. I gave both the option to the company. And I said conservative. Now we are in the advisory mode. Because there is a thumb rule in our practice. If you are advising the client, take a conservative view. If you are litigating it, you take an aggressive view. There is no limit for you to go beyond GST, challenge it under constitution, take any argument from anywhere where you wanted to take. That is an aggressive view. When you are advising the client, advise within the GST. Say that no, it is very highly risk transaction. So they said, what is the big issue? It's only 50,000, we will pay and then discharge the liability. So high C said has impact. Inbounded transaction I already explained. So we already explained 71A, 71B, 71C, and in the 7 capital A we explained. 7.2 we already discussed schedule 3 transaction, and there subsection B says I can notify goods and services which are exempted, which are neither supply of goods nor supply of services. That they said I will notify at later point of time. Now section 713. So these are all the 713 says I can in future I can notify some goods as supply of services, some service as supply of goods. So are you clear about 71A, 71, 72, 73? We covered the entire scope of supply in a simple format with the complete understanding. I will repeat, 71A we told supply, meaning of supply we said, scope of supply we said, supply includes all forms of supply such as sale, transfer, disposal, sale, transfer, barter, exchange, disposal, lease, license, rental, all these 8 keywords we explained. Then we further down and said it should be for the business and there should be a consideration. In the 7.1b we said import or service, only consideration should be there, need not be in the course or furtherance of business. And last one we said 7.1c we said, what did we say? Only, consideration is not required if it is in the course of furtherance of business. Now if you come down 7.1a, that capital A inserted to classify schedule 2 transaction as for the classification purpose. They said 7.1 if the transaction is falling into 7.1a, b, c, small a, b, c, then for classification purpose you come to schedule 2. Last one is schedule 7.2 says all transactions which are given under schedule 3 are neither supply of goods nor supply of services. And further down they said I can notify any goods or services for that matter. 7.3 says any transaction where any goods, I can later point of time say that it is not goods, services, or the vice versa. So we covered 7, we covered 9. 9.1 says, I will repeat for the everybody's thing. 9.1 says I will tax you once it becomes supply. There is something called all your intrastate supply will be taxed with central tax rate not exceeding 40%. Rate not exceeding 40% as may be prescribed. So I will issue notification in this regard. That is all rate notifications, central tax notifications are coming under 9.1. But they are using the word 40%. Not exceeding 40%. But some cases we could see more than 40%, right? Or I would put, but 40%, it's actually 20%, not exceeding 20%. 40% is both put together. But we can see motor vehicle, it is 28%. How can it come? They are saying Central Goods and Service Tax Act says your rate should not be exceeding 20%. Then in such cases, how can the motor vehicles be taxed at 28%? It is only Central Goods and Service Tax rate. They are not talking about the entire one because CGST will come as an addition to it, right? So it will be taxed as separately. Now we are talking only about the CGST. Now if we go further down, 9.2 we already discussed, petroleum products will be applicable as notified. 9.3 reverse charge mechanism, notification number 13/2017 dated 28th June 2017 as amended from time to time. and the 9.4 transaction with unregistered party, that is also undergone a change. 9.5 e-commerce operator, where the transactions are routed through e-commerce, where there are 3 services being notified. One is transportation of passengers, 2 accommodation services, 3 household services. So we covered 7, we covered 9. Now what is 8? Section 8 and section 13 and 12. See, section 8 is talking about composite and mixed supply, first point. And section 9 we already covered. 10 we have composition levy, that will be taken care by another speaker, so I will not be dealing with the section 10. Next is 11. 11 is the only section under the CGST Act where the government can give exemption notifications. Come down further, 11 is the exemption notification, 12 for supply of time of supply of goods, and 13 time of supply of services, 14 change in rate. What would be the implication? 15 valuation of supply, which is not my topic, which will be dealt by another speaker. So I think it exactly 11:30 time. We'll break for a tea and we'll come back exactly at 11:40. Then we will deal with time of supply of goods, time of supply of service, composite and mixed supplies. Thank you so much. Supply means 2 or more supplies, 2 or more taxable supplies. I'll put it that way. Composite supply is defined under section 8 of the CGST Act, which means 2 or more taxable supplies which are naturally bundled, out of which one is a principal supply. I will repeat, there are 3 legs to this particular definition. One is 2 or more taxable supplies, naturally bundled, which are naturally bundled, out of which one is a principal supply. Now let's analyze it. 2 or more taxable supplies. Taxable supplies means exempt supplies are included in it. So for example, I am sending my laptop and with an exempted product, another product, and freight is being charged, because when I am sending my laptop along with an exempted goods and freight has been charged. Now that will be considered as a composite supply because it is naturally bundled. So they are using the word 2 or more taxable supplies. So can I apply this composite supply definition for that particular transaction because one is exempted? It says, if you go to taxable supplies definition, taxable supplies means which are leviable. Taxable includes the leviable also. Leviable means exempted also will be taxable supplies. So even if you take an argument that it is exempted, so this will not be applicable, that point will not stand. So that for first line you have to give due priority. Don't try to argue that one is exempted, one is taxable. No, it will not stand. Second is says naturally bundled. Very, very subjective one. What is naturally bundled in the ordinary course of business? What is naturally bundled in the ordinary course of business? Say for example, you are going to a hotel. Hotel is giving you breakfast at free of cost. Is it naturally bundled? It is an ordinary business practice. It is naturally bundled. The hotel is giving you dinner at free of cost. Is it naturally bundled? Very rare. So it is a very disputable one if you take a stand that it is naturally bundled. Freight, is it naturally bundled? Naturally bundled. So you have to apply the point what is naturally bundled. Very, very subjective. Please be very, very careful while you are using the word naturally bundled. The last leg to this particular transaction is one of which, out of those supplies, one of which is a Principal supply. What is principal supply? Because I didn't understand principal supply. So because in the CGST Act, it has been defined what is principal supply. Principal supply means one is a predominant supply. What is a supply? Predominant supply. Principal supply means, if you go to the definition of CGST Act for principal supply, it says predominant supply. Out of which one is a predominant supply. Now let's analyze these three legs very differently. First point, one is taxable, one is exempted. Section 8 is applicable, composite supply is applicable. Second line, naturally bundled. You applied your facts into it and understood that it is naturally bundled, no problem. Last leg is principal supply, out of which one is a principal supply. Assuming that both are principal supply, assuming that out of that supply, both are principal supply, assuming that you are sending this laptop, this is taxable, okay, and this is taxed at 28%, and I have one more product which is equally same value, same features, almost same, taxed at 18%. Which one will you consider as a principal supply? What is a predominant supply? That is nowhere it is defined what is predominant supply. If you get a confusion that two products are predominant in that particular supply, composite supply will not stand. Why? Clearly says out of which two or more taxable supplies, one is a principal supply. If more than one comes, it will not stand. Why is it so? You have to understand that also, because the tax rate which is applicable will be principal goods rate or goods or services, principal supplies rate. If there are two, how will you apply to that particular composite supply? See, for example, freight, you have two goods, both are principal supplies. One is falling under 28%, one is falling under 5%. Which one will you apply? You cannot apply. So composite supply will fail if there are two more principal supplies, predominant supplies. Now mixed supply. What is mixed supply? Mixed supply means two or more supplies which are sold for a single price. Say for example, I am selling this laptop along with this bottle. Okay, and both are not naturally bundled. Like toothbrush kit you will get, shavings kit you will get. Toothbrush kit, if you go, you will get one brush, you will get one paste, tongue cleaner, etc. That is not naturally bundled. Though we are using it together, it is not naturally bundled in the market. Now, that is not in the ordinary course of business, you are not selling it like that. So that being the case, if it is not naturally bundled, if it is a mixed supply, you take highest tax rate which is applicable to that product, out of that product. Say for example, toothbrush, tongue cleaner and toothpaste. Assuming that toothpaste is falling into 28%, assume, then that rate has to be applied for the entire single price. And it should be for a single price. If you are using multiple price, then it is not a composite supply. It will automatically fall into independent supply. Right? Single price, multiple product, which are not naturally bundled mixed supply. Composite supply means, we already discussed the three legs to it. Then in such cases, what is the principal supply? That rate will be applicable. Okay. So freight, assuming that it is part of, it satisfied all the conditions, freight will always, sometime it will fall into 28, sometime it will fall into 18, sometime it will fall into 5%, because it will step into the shoes of a composite supply. Okay. Now, this composite supply, mixed supply has to be read along with works contract. Why am I saying that? Because it is actually kind of bundling only. There will be goods and services. Section 2, subsection 119 of the CGST Act 2017 defines works contract. The only underlying point which I have to make is, it is only on the immovable property. Assuming that your AMC services, which is not on immovable property. Say for example, you are taking an AMC for your computer maintenance. That is not on immovable property. It will not fall into works contract. it will fall into either composite supply or mixed supply. Depends upon the facts and circumstances. Assuming that most of the cases it will fall into the composite supply. Correct? AMC, you are entering into an agreement saying that I will provide you maintenance contract, maintenance services, your computer maintenance services for next 1 year. What is the predominant supply in this? Is it naturally bundled? Your supply of goods also will come into it. Sometimes spare parts will come. Which is the predominant supply here? Services. All of you agree? Because we are not taking AMC for purchasing the material, right? So AMC, everybody agrees? Now, can I do like this? I will enter into a AMC contract and I will say him, you pay 18%, all your computer parts are falling into 28%. Okay, all your computer parts are falling into 28%. You do one thing, I don't want to pay, now it is, all your computer parts are falling into 5%. Okay, because there's a reason why I am changing this rate. All your computer parts are falling into 5%. You do one thing, I don't want to pay 18% on the entire thing, because tomorrow if there is anything like that, you charge for, you provide me service alone. If there is any supply of goods, I'll pay you separately at 5%. Is this okay? I just restructured the same transaction into two and said, it is an AMC contract only. Agreement is clearly saying it is an agreement for annual maintenance contract which includes supply of spare parts, everything. Agreement is very clear. But I am asking him, suppose you don't raise invoice for entire supply of works contract. That means entire supply of AMC. You raise it separately, it is 1 lakh. I am saying that you raise only for 50,000. Charge 18%. Assuming that at the end of the year, all my parts put together comes to 50,000. I am asking you charge only 5%. So I am saving 13% on 50,000. Is this transaction okay? Is this transaction is okay? In my view, no. Because your underlying document, underlying contract is clearly saying that it is a composite supply. Correct? So predominant supply is what? Services. And we are also not advising the client to take these kind of loopholes, right? Because you can say 13%. But my point is, there was a circular which is issued by the government, 48/2018. That circular says, if you are going for a car service, motor vehicle service, what will happen? There will be service, there will be a supply of goods also. You are going to a repair shop for the goods or for the service? Mainly for the service, and then the parts are incidental to it, right? So what is the composite supply? 18%, right? Composite supply will be, predominant supply is what? Service, and 18%. But when the government thought about it, they realized that most of the motor vehicle parts are falling into 28%. What they cleverly said, they said, if you are raising two invoices separately, then both will be considered as independent supply, which is against the fundamental concept of section 8. You cannot change your color according to the revenue which you can generate out of the transaction. If you can take that stand, I will also take the stand in AMC. Don't take it, but I am just saying that my ultimate point is, these kind of circulars should have been curbed in the initial stage itself, in my personal opinion, because for one particular transaction, if you are looking for that particular revenue, you are going to complicate things. Now I can also, as an assessee, argue, saying that when you are taking that stand, if my spare parts are falling into 5%, why don't I apply this circular, same circular? So I would humbly request government not to complicate further. Already it is complicated. It is a one nation, one tax. These kind of circulars will unnecessarily create a lot of confusion among the assessees. Now, so composite supply and mixed supply, we are very clear about it. Any doubts? Any doubts? Okay. So we covered 7, 8, 9. Now we are going to 10. I am skipping, as I said, composition levy. It will be handled by another speaker. I don't want to get into it. 11 I already explained. All exemption notification will come under section 11. I wanted to make a point out here. See, exemption notification is a little tricky one. Recently, the tractors, etc., got exempted. Okay, and because what happens is there was a representation, etc. See, basically, if you are looking at the exemptions, you have to be very, very careful. If I know GST very well, I will ask the government not to exempt the goods. I will ask the government to make it as lower rate. So, for example, you charge 1% or 0.25%. Why? The moment you say exempted, your input tax credit has to be reversed. Agree? If you are supplying exempted goods, your input tax credit has to be reversed, and by doing that, you will have a reversal impact in, as per Rule 42 and 43 of the CGST Act. That will hit your ultimate price. Say for example, I am selling a goods. I am selling this laptop, or say I am selling one agriculture related product for say 10 lakhs. The 10 lakhs I have to charge GST of 18%, say for example, or 28% for that matter. I am selling it at 28%. So now it is coming to 12,80,000. Correct? Agree? Tomorrow, government is saying that this, based on the representation, this 28% is exempted. What will happen? He would have purchased the input tax credit. Now he is able to take the input tax credit on that particular thing. So 28, whatever he purchased, assuming that he is selling it at without any margin, just for a computation purpose. I purchased for 10 lakhs, I am selling it for 10 lakhs, assuming for a moment. Now, if my product is exempted, I cannot charge GST. Whereas whatever my input tax credit, which is 2,80,000 on my purchases, that will become cost. Automatically your price will come back to 12,80,000. Correct? Agree? So, what I want, assuming that the government is saying it is 1%, they can take the input tax credit, they can take input tax credit because it is not completely exempted, because it is coming under inverted duty structure, they can go to section 54 subsection 3 where they can claim for refund. Government doesn't want that and doesn't look good also. If you say it is exempted, public will feel good. Okay, no tax on agricultural product. What is really happening in the ground? It is different. Only people like us will be able to appreciate. No, that is danger, and nobody will believe it also. It is very difficult to educate the public. Public will say exempted, no tax on that. What is no tax? Because ultimately your cost is going up, rate will remain the same. On profit margin, whatever the reduction, whatever the exemption comes, on the profit margin only, it will have impact. Assuming that I purchased it for 90,000, I am making 10,000 profit. That would be the only reduction which I effectively get it. Correct? So whenever there is an exemption, don't be happy. It is actually not effective. Okay, there will be some sort of reduction, but actually government wants to give you the complete exemption. Then they should have gone for 1% or lower rate. Now, our next point is exemption we have already discussed. Now, we will go to section 12 of the CGST Act, time of supply. Okay, what is time of supply? Now, if you take one transaction under GST Act, it requires, in my personal view, it requires 4 fundamental things. What are they? One is, it should be supply, obviously, it should be supply. One is value of supply, rate of supply, that is classification, time of supply, place of supply. These 4 ingredients are the major ingredients you have to apply it on a day-to-day basis. I will repeat. Once it becomes supply, your time of supply, your value of supply, rate of supply, place of supply. These 4 elements should fall in place properly. Rate of supply based on classification 1/2017 notification, central tax rate notification dated 28th of June 2017, as amended from time to time, will give you the rate for the purpose of goods, which is under 9(1) of the CGST Act. For the services, 11/2017 dated 28 June 2017 as amended from time to time, for the services you will get the rate, which is also coming under 9(1). Exemption. All these 11 exemption notifications for exemption of goods under section 11 comes under notification number 2/2017 dated 28 June 2017 as amended from time to time. For the goods, corresponding one is 12/2017 for services as dated 28 June as amended from time to time. Further go down, for services 9(3) notification comes under 13/2017 dated 28 June 2017 as amended from time to time. So if you want to understand classification, go to 1/2017, and before asking the clients to pay, go to 2/2017 and see whether it is there in the exemption notification. No, you give your recommendations for taxation. If you come to services, go to 11 to see whether it is there in the identify SSC code, etc. Go to 12 whether it is to see whether it is exempted or not. You go to 13 further down to see whether it is coming under reverse charge mechanism if it is an inward supply. This is how it has been structured. Now, so I told the rate, how you have to find it out, rate of supply. Go to section 9(1), go to these notifications which I just read out few minutes back, and decide your rate of supply. Okay, there is no concept called rate of supply, but I am just using for the understanding. It is actually called classification, but ROS, rate of supply. Next is value of supply. Go to section 15 of the CGST Act. That is the only section which talks about value of supply. Read with rule 27 to 35 will give you the value of supply. Anyway, value of supply will be dealt by another speaker. The next one is place of supply. Place of supply is a very, very important concept which is given not under the CGST Act but under the IGST Act, section 10 for the goods, 11 for the goods, whether it is an import and export, 11 will come into the picture, 12 for services, 13 is also for services. So 2 section each, 11, 10, 11 for goods, 12, 13 for services. 10 talks about domestic transactions, 11 talks about import and export, paid, how to determine the place of supply. 12 talks about both the parties are in India, 13 talks about either of the party outside India. So place of supply, that will also be dealt by another speaker. So place of supply, POS, you found it based on section 10, 11, 12, 13 and 14 for that matter. And the next one would be, we already discussed rate of supply, value of supply, place of supply, time of supply. Time of supply is my topic now. There are two kind of time of supplies which you have to find out. Time of supply for goods, time of supply for services. So let's come to section 12(1) of the CGST Act. Section 12(1) of the CGST Act says, time of supply means the time at which the tax has to be paid. So it is only a point, they are determining, they are saying that what is time of supply? When you have to pay tax. That is what I am giving here in section 12. You take the corresponding 13(1) also. There also they are saying, for supply of services, I will tell you when you have to pay tax. That's all. Time of supply. There is no big issue in the section 1, subsection 1 of 12 or 13. 12 is for goods, 13 for services. I am just parallelly taking through so that it will be very easy for you. Second section says, time of supply for goods, forward charge. I will put it that way. Forward charge would be the invoice which is raised under section 31(1) of the CGST Act. That will be the time of supply. I will repeat. For goods, they are saying what is the time at which you have to raise an invoice under section 31(1). 31 31.1 is an invoice section. I am not going in detail, but I will just give you further because that will also be dealt by another speaker. 31.1 says when to raise an invoice for the goods. There it says or prior to the removal. That means before or at the time of removal of goods, you have to raise the invoice. I will repeat. 31.1 says before or at the time of removal, you have to raise the invoice for if there is a movement. Okay, if there is no movement, then that section further goes down and says that if there is no movement, whenever the delivery happens, that means to another person, that time you have to raise an invoice. But in most of the cases, removal, where there is a movement will be there, and then at the time of removal or before removal, you have to raise invoice. So we will come back to the section 12.2 because 12.2 only told us no, you have to go to 31.1 to find out 31.1 to find out when to raise an invoice. Fine, perfectly okay. There was one more sentence which they are saying, in case of goods, the payment, if you receive a payment, that will be the time of supply. That means either of this, whichever is earlier will be the time of supply. I will repeat, if you receive an advance against that supply or invoice raising date, whichever is earlier would be the time of supply. Understood? Two scenarios. One is you are getting the payment in advance and you are supplying. Then payment which date will be the time of supply. Second scenario, you supplied, you raised invoice, everything, you got the payment after some time. In that case, invoice date will be the time of supply. Now, from 1st July 2017 till 14th November 2017, this was applicable, subject to notification 40/2017, where they in between that came on 13th October 2017, dated 40/2017 notification central. It came on 13th October 2017, where they said, I will no need to pay GST on advance based on section 13 because advance is exempted from payment of tax. You pay it at the time of raising invoice, subject to some condition that your turnover should be 1.5 crores, etc., etc. But subsequently, that was complicating. Subsequently, on 15th of November 2017, they came up with another notification, that is 66/2017, where they said, no, you need not pay tax for the goods. For the goods, you pay tax only whenever you raise an invoice. There are two aspects to it. One is, time of supply doesn't prescribe any right to the government to issue notification. I used to tell this, but I just wanted to ensure that you're all aware. These two notifications, 40/2017 and 66/2017, are issued under 148. 148 is only a procedural kind of aspects. You can issue a notification, but this notification issued for the purpose of determining the liability under section 12 and 12 of CGST Act. Fundamentally, if you go, these two notifications doesn't have validity as per my opinion, but since it is favorable to us, we are all enjoying it. No problem. You don't have to go to the constitutional validity of these notifications and all. Just ignore, but just keep it in mind that if tomorrow I am challenging these two notifications, it will be quashed immediately, subject to the case how we are presenting it. Now, this is the time of supply for goods under 12.2. All of you are clear? All of you are clear? No doubts? So, as far as on date, if you see, your invoice is the time of supply. And you have to mandatorily issue your invoice before movement of, at the time of removal. That you have to ensure. You cannot say that I removed my goods now, it reached to Gurgaon already, now I am raising invoice. Then you are non-complying with the 31.1. Okay. Come back to the corresponding forward charge for services, which is under section 13.2. Clear? 13.2. 13.2 says, the time of supply for services is earliest of the following. One is date of payment. That means whenever I receive the payment, that will be the date of time of supply, or the due date within 30 days from the date of provision of service. or you can raise invoice before also, or before or within 30 days mandatorily you have to raise. So you are based on your invoice, that will be the time of supply. So look at this. So here also it is very clear that you are raising an invoice for provision of service. You can do it in two ways, three ways you can do it. One is provision of service. Assuming that provision of service is on 31st December 2018, you can raise an invoice before. Agree? That will be the time of supply. You can receive payment in advance. That will be the place of supply. Time of supply. There will be scenarios from 31st December. The government has given you the right to raise an invoice within 30 days from the date of provision of service. So from 31st, government has told that 30th January will be your time of supply. Understood? So government has given you power to raise invoice or issue invoice within 30 days from the date of provision of service. Most of us, assuming that our balance sheet being signed on 30th of September, then you have 30 days for raising invoice. But here you have to be very, very careful. In services, you have to be very, very careful. Just be with me for this particular provision. Assuming that you are raising invoice within 30 days, then in our example, 30th January 2019 will be the time of supply. Agree? Agree? Assuming that you are not raising within 30 days, you are crossing 30 days, you are raising it after 40th day or any day after 30th day, then time of supply will be date of provision of service. I will repeat. If you are not complying with the rule, section 31(2) for raising invoices, that is within 30 days, your time of supply will come back to the date of completion of service. Then it will be 31st December 2018, not 30th of January. I'll repeat once again. Government has given you right to raise invoice within 30 days from the provision of service, that is 30th of January. If you are raising invoice within that time, then that will be the time of supply. Assuming that you are not enjoyed or you are not availing the benefit of 30 days, you are raising after 30 days, then the time of supply will come back to the date of provision of service. Very, very careful. When you are calculating interest under section 50 of the CGST Act, you have to consider this time of supply. Now, clear? Everybody is clear about this? Government has given you the time, but this advance received, no GST, is only applicable for goods. Please make note, 40/2017 and 66/2017 are not applicable to services. It is applicable only for goods. Now let's come back to 12 subsection 3. We have two ways of charging, right? Forward charge and reverse charge. Now let's come back to reverse charge. 12 subsection 3 talks about reverse charge. Like that, 13 subsection 3 talks about reverse charge for services. As far as goods are concerned, reverse charge will be applicable based on the time of supply will be determined based on section 12 subsection 3. All of you are with me? All of you are with me? Or you want to show some presentation or something? I just wanted to ensure that nobody is sleeping, because now it's almost 12 o'clock. Some of the people's expression I can understand, but still bear with me for another 1 hour. Is it, how is the presentation going on? I just wanted to get a feedback. Is it okay? Okay, fine. So I'll just, for making you awake, I will just show one presentation, one PPT. Okay, because otherwise what will happen is, because post-lunch session I always ask the institute, and I am thankful to the institute enough, more than enough, and I got a big opportunity of presenting all my presentation in the morning session. All my presentation in the morning session. So I did not get exposed to the post-lunch sessions. Whenever they call me, I say, sir, please give me morning session. And they gave me morning session. So whatever so far I handled, it was in the morning session. We'll just go through one slide alone, because just wanted to ensure that you are with me. At least by seeing some pictures, some people will just look into it, oh, something is there as a picture, let's see that. See, you can just go through it, these are all what we have discussed. Yeah. See, RCM on supply of goods, 12 subsection 3 says, date of receipt of goods. Okay. Date of receipt of goods or date of payment. Date of payment as entered in the books of, as date of payment or date of issue of invoice, any other document by supplier. I'll just put it in this way. All of you are looking into the PPT now. I think everybody is aware now. I think away. Now I'll just close it. That is, because PPT, if you go through it, it will be, that you can use it as a reference. But I will just explain the concept clearly so that you are clear. Assuming that I purchased these goods, this water bottle, the date of receipt of the goods is 31st December 2018. Okay, it's under reverse charge mechanism. 9.4 applicable. Assume for a moment it is 9.4 applicable. Reverse charge mechanism. Because you have to be very careful. For goods, I'll give one more clarity. 1st July to 12th October, it was applicable on goods. Now, only if the goods are mentioned under 9.3, there are 7 goods which are prescribed under 9.3, cotton, agriculture, etc., because generally which will not be applicable to us. To be very honest, if you look at our industry, generally 90% of the 90-95% cases, now RCM goods are not applicable. But I am explaining this mainly for the purpose of your audit, where you have to do the transaction audit for 1st July till 12th of October.
But I think they have removed the wording called reverse charge mechanism in the tax audits, GST audits.
No, they have not removed it. They have not removed it. Where they have removed it? They cannot remove it now. It is a prospective notification. So it is applicable, 9.4 is applicable from 1st of July till 12th of October. Okay. Now, what is the date of receipt of goods? 31st December 2018. That is the first condition. Second, you are making the payment on 1st of January. 1st of January you are making the payment. Say for example, you are paying 100 rupees. Third is, for this goods, the supplier would have issued a document, invoice, right? He would have issued an invoice. That date, 30 days from that particular date. So we have 3 dates. Receipt of goods date, my payment date. I'll put it this way. I received the goods that date. He gave, along with this bottle, he gave me an invoice also, which is having a date. Third is my payment date. I booked it, I am making payment. 3 key dates are important in this transaction to understand better. All of you are with me?
Yeah.
31st December, I received the goods, sir. On 1st of January, I received, the date of invoices, say for example 31st December itself for that particular matter. I made the payment on 1st of January. Whichever is earlier would be the time of supply under reverse charge mechanism, provided, I will go further ahead, government has given you the power to add 30 days from his date of invoice. 30 days from the date of invoice. Now, assuming that the date of invoice is 31st December, you are adding 30 days. It will be 30th January 2019, correct? This received in which date? 31st of December, right? When did you make the payment? 1st of January. Whichever is earlier will be the time of supply for goods under reverse charge mechanism. Clear? Here the risk involved in it is, assuming that your party has issued the invoice but not delivered to you. How do I know he is giving the invoice after? I received the goods, okay fine. Then I can book that particular date as my time of supply. Assuming that he has not given the invoice, he has not delivered the goods, he raised invoice 2 months before or more than 30 days. Okay, he raised it and he booked it in his books of account. He delivered after 1 month along with the goods. Goods receipt date would be after 1 month, but already the clock would be ticking because he raised invoice 1 month before, 30 days before. In such situations, you have to be very, very careful. Here the problem is, I'm not in favor to this particular transaction, because how do you know that date of invoice of your supplier? He is not registered under GST. That's why I am coming to reverse charge mechanism under 9.4. How do I know the time of supply of that particular invoice or transaction? Because he is not. There are many cases where myself, we are sending our invoice to the companies in Sri Perambatoor. CFO will not be there, so that invoice will come back to us. I will tell you there is one more issue also. That invoice will come back to us. Again, CFO would be traveling and he will say, Rajiv, you send it after 1 month. Then only I will be available. Okay, we will send it after 1 month. In such scenario, my date of invoice will not change. Correct? My date of invoice will not change. So these are all the practical difficulties. Actually, the government should have done what? They should have used the word any invoice, based on invoice. They should have restricted the word invoice, because they are using the word invoice, comma, any other document for that matter. Invoice means, invoice is defined under CGST Act. Invoice means, invoice is defined under CGST Act, which has to be read with rule 46, which is given at 17 line items. Under reverse charge mechanism, I am also liable to raise an invoice. So if he is if he is saying that invoice, I would have taken it as CGST invoice. He is unregistered, so I am liable to raise an invoice. I know my invoice date. Okay, then that would have been the better wordings. Then lot of confusions, lot of practical issues could have been avoided. Now, since I talked about reverse charge mechanism, please understand, I will give you a list of issues which I have come across in the industry. Most of the companies, or any registered person for that matter, they are coming under 9.3 or 9.4. Two documents are very, very important. One is RCM invoice. How many of your clients are having this RCM invoice? Most of them, they don't have RCM invoices. RCM invoice should be as per rule 46 of the CGST Act. There are two scenarios. RCM, you are transacting with a registered party and unregistered party. Registered party, he himself is issuing an invoice. Invoice is as per CGST Act, then you don't have to raise an invoice. Second scenario, he is issuing an invoice which is not under GST Act because he doesn't have a registration certificate number. Then the recipient has to raise a RCM invoice under Rule 46 of the CGST Act, as per Rule 46. This is first documentation which is required under RCM. Second documentation, the moment you are making payment, I told in this example 1st January I will make the payment. There is some document called payment voucher. Under Rule 52 of the CGST Rules 2017, which has to be prepared. When you say all these things, it is very, very difficult to convince the client. So please ensure that, but tomorrow if there is any inspection or something, they will ask for this. So at that time, don't go behind the clients and all. Just inform them, RCM, 2 invoices are required. GST invoice, which you have to raise. If your supplier is unregistered, if he is registered, no problem. Assuming that an advocate who is registered is raising an invoice with the GST number, no problem. Then you need to have only payment voucher under Rule 52 of the CGST Rules 2017. This is the documentation side. Now let's come back to 12.3 for services. Services, they are saying that date of payment, or here there is only 2 conditions. Date of payment or 60 days from the invoice date. You just compare it, 12.3 there are three conditions. One is receipt of goods, sir. Second one was payment. Third one was supplier invoice date is 30 days. Come to 12, first condition is not there. Receipt of provision of service, that is not there. Cut it. So you have two remaining conditions. Payment, yes, it is there. Come to 30 days from the date of receipt. Here it is 60 days from the date of service. I am just comparing 12.3 and 13.3 so that you will get a better understanding. I will just give you a practical example where it is there in my case study also. I will just go to one case study for better understanding, because I feel that that should be. I prepared some case studies also, but we have gone through all this. I will just take you through once again once we finalize it. Because this transaction will cover all your applications. Case study 5, RCM. I'll probably, if time permits, we'll go through all the 6 case studies, which covers everything. Covers almost all concepts. Now, case study 5, RCM 9.3. Supply reference. Okay, that you leave it. You read from here. Advocate Hanish Salve has appeared before Supreme Court for Pure Ayurveda Private Limited. I changed the numbers and the names of the advocate, everything, but this is the actual facts. Advocate has appeared before Supreme Court for Pure Ayurveda for a company. He issued an invoice for an amount of 10 lakhs without GST on 1st November 2018. He issued it. The invoice, obviously without the GST, because advocate services are coming under RCM, not exempted, RCM, where recipient is liable to pay GST. So actually Pure Ayurveda is liable to pay GST based on 13/2017 notification. The invoice received by the company only on 1st March 2019, exactly the same thing. Advocate sent the notice to Sri Perambatoor. First they made a mistake, they simply mentioned so and so company private limited, and in Sri Perambatoor if you mention company name it will go back. The recipient has to acknowledge those companies and all in the gate security, they send it back. Second time it is sent to the Director of Finance, he was not in station, it went back. So like that there was a practical issue. So ultimately the invoice is received in this month only, 1st of March, because it is a very recent case which has come to me. First point, is it a supply as per section 7? We have agreed, right? We have gone through all this. Who is liable to pay GST under this? Levy? 9.3. I want your answers now. Pure Ayurveda, no problem. I'm feeling that I'm getting some responses now, and then I'm happy that whatever presentation has gone to your head. Now, what is the time of supplying this? You tell me. What is the time of supplying this? You tell me. Sorry? Date of payment. I have not made the payment at all, because not yet received the invoice. 60 days from that particular date. What would be the 60 days? I don't think the answer is there, so you have to calculate. 60 days from, sorry? November 30 days and then 30 days. December 30th, right? So, December 30th is the time of supply for this. When are you receiving the invoice? March 1st. Can you book it in the books of accounts? Can you book it in the books of accounts in March? The moment you book it in the books of accounts, you are making the payment in March. I agree. 60 days from the date of invoice is when? December. So what is the time of supply? December lende you have to pay interest till 1st of March. Or for that matter probably till the payment you have to make the interest. Right? This is the issue. Because how do I know his date of invoice? Actually this advocate was my close friend. So he asked me what should I do. Because the company, see, it was like I was jammed between, it was sandwiched between the company and then the advocate. Advocate is also my close friend, company is also our close friend, sir. Now company is asking what to do. I said provision, sir, it is not possible, you have to pay interest. Company said no, we will not pay interest. They send it back to them. Advocate asked me, no Rajiv, you said that there will be an issue, and what is the issue? I said, sir, time of supply issue. Company has to pay interest, they will not accept it. That's why I also declared it my invoice, GST return. Because he is also registered. I also declared it my GST return. What should I do? I said, now the ball is in your court, sir. Company, if they are ready to pay interest, let them do it. Otherwise, you have to raise a new invoice after issuing a credit note or whatever it may be. Credit note, I don't know whether it is legally valid in that particular situation. Because credit note under 34, there are some certain condition to be satisfied to raise a credit note. You cannot simply raise a credit note or debit note. Either there should be deficiency in service. Is there a deficiency in service? Only in courier service there was a deficiency. His own service there was no deficiency. So credit note also may not be a possible option. So I am completely jammed between these two. So I said, whatever you say. Finally the advocate said, okay, fine, it is, because I cannot wrongly advise the client also. So finally advocate said, okay, you deduct whatever the interest payable to you, that we will consider as a cost, because I cannot change my return. He came to me for GST advice. I said, no, you cannot, because you cannot raise a credit note. There is no deficiency in service. Company came to me. I said, no, you cannot, because interest will hit. Now the conclusion is advocate is bearing that interest because of this. Okay. So you understood, right, what is the issue. So what I am saying is, it should have been like this. Invoice under RCM. The company who has to raise an invoice, that invoice date means I don't have any problem, because the moment I receive the service, I will do it. Now, so assuming that, will your answer be different if Hanish Salve is an unregistered consultant? He's not an advocate, assume for a moment. He is a, don't think that Harish Salve is my friend, okay? I am not saying that, because many people will conclude that Harish Salve is my friend. Because Harish Salve is very famous, I thought people can correlate with Hanish Salve, that's all. I am not using his name at all. But don't think that he is my friend. My friend is a different person who is also a very senior advocate. And so because tomorrow it's all very, very important that when you are talking in the public forum, people will say that no, that fellow knows this fellow. He is Harish Salve. This is Hanish Salve. It's not same. And see, assuming that he is a consultant, he is not an advocate, then will your answer be different? It will not come into 9.3, it will come to 9.4. Still both are services only. Time of supply will remain the same. Documentation required, we already discussed this. Are you clear about this particular provision? 12.3 and 13.3. Are you okay? You understood? Okay. 4 I am skipping because it is only about the voucher. I am just skipping it. Fifth one is 12.5 and 13.5. 12.5 says if you are not able to take the time of supply from based on any of the above points, that is 2, 3, 4, then come to me, I will give you the time of supply. What is that? They are saying due date for filing the returns. That is also not available. The date of payment of tax. It is a residual provision. If you don't get the time of supply, either in 12.2, 3, 4, 5 says, you come to me, I will give you return filing date or tax payment date. 13 also saying the same thing. 13, 1, 2, 3, 4. Fifth one is saying, if you don't get the time of supply for services in 13, 2, 3, 4, come to me, I will give you, it is your due date for filing that GST returns, even if you are not able to identify tax payment date. So we have covered the time of supply of goods and services subject to one important point, that is 12.6, that is the last section. 12.6 says, you know that in the industry there is a practice that we will raise an invoice and saying that if you don't make the payment within 30 days, your credit period is 30 days, if you don't make the payment within 30 days, I will charge you interest at 18%. Have you seen that? Everybody has seen this? Now, GST is a concept. Tax is payable based on accrual. How many of you agree that GST is payable based on accrual? Is it based on receipt or accrual? Under old service tax law, we had a concept up to 50 lakhs, 60 lakhs and all, we were paying based on collection. But now, it is on accrual basis. So don't you think that when you are raising an invoice to a party saying that 30 days is your credit period, If you are not paying within 30 days, I will charge you 18%. Tomorrow when there is an audit from the department will say this 18% they didn't pay within 30 days. It is interest is accrued. Interest is also part of consideration as per section 15 of the CGST Act for the valuation purpose. You go to when the next faculty comes for valuation, he will say that interest also will be part of your consideration. So consideration includes interest. Now, don't you think that you have to pay tax on that? Say for example, 1 crore is the invoice. Construction companies and all will raise one invoice for 1 crore. Payable is 18 lakhs is the GST, and he is not paying 1 crore within 30 days. I am saying that 18% is the interest. So every month I have to charge 18% per month, correct? That will be the time of supply. And ultimately what will happen? After 1 year you will get the payment for 1 crore 18 lakhs subject to income tax TDS. By the time this interest would have accrued, GST tax would have accrued to the extent of more than 1 crore. It is better you should say, no, I don't want this payment. Right? Because you have to pay, this interest will accrue, right? Interest will accrue 18 lakhs. On that you have to pay GST. You understand? 18 lakh, see for example, after 1 year, as per that PO, your interest accrued would be 18 lakhs, right? 18 lakhs, assuming that the payment comes after 1 year. Government says that 18 lakhs you pay 18%, maybe 3.6 lakh or something. It is a cost, right? It is a cost. Some cases, the payment will come maybe after 5 years because retention money, etc., maybe 10 years or something like that. Sometimes the case where this will go up like anything. So my ultimate point is, government has given a consideration here in 12.6 and 13.6. They said, in case of any belated consideration payment on which you are charging an interest, penalty or late fee, I will repeat, interest, penalty or late fee, the time of supply for that consideration, that value will be the date of receipt of such money. So whenever I receive, that will be the time of supply. Assuming that you don't receive, no taxation. The time of supply will never come, correct? Time of supply will never come for that 18% additional consideration. My point is this, if there is any interest on the belated payment of consideration, if there is an interest, late fee or anything for that matter, penalty, anything charged, time of supply will be based on receipt. Now I will say you, some companies they raise an invoice in advance saying that okay, you paid after 60 days, pay interest for 30 days. He will raise an invoice with the GST. Doesn't matter. Government has given you time up to receipt. If you are paying in advance, no problem to the government. No problem to the government. Because I have seen in some cases, the other party would have agreed for this interest payment. They will raise an invoice with the GST at 18 lakhs. Whatever, after 1 year, they will raise an 18 lakh invoice. On that, whatever 18% they will charge, they will discharge the GST liability in the same month. But it is not required. But they are saying that software is not designed like this. Software is designed in such a manner that the moment we raise a GST invoice, automatically that month return it will go. So there is a practical difficulty. If you can raise an invoice outside the system, then only this will be possible generally. So this is based on receipt. Any doubts in this? So we covered 12.6 and 13.6. That's all. 12.1, 13.1 talks about what is this section is all about. Time of supply means that is the time at which you have to pay tax. 12.2, 13.2 talks about forward charge for time of supply for goods and services. 12.3, 13.3 reverse charge. 12.4, 13.4 for vouchers which we have not handled. 12.5, 13.5 which talks about residual method, date of filing returns or tax paid date. 12.6, 13.6 talks about belated interest payment, belated consideration in interest or penalty or late fee. So we have covered by and large Now I just want you to take you through some of the important provisions of GST under levy and collection very quickly. We'll finish it on time. Don't worry. Because the 13/2017, I have to discuss two major important points: GTA, advocates, security services. Major. Okay. These are all I told you there are 9(3), there are 7 goods which are being notified where RCM is applicable. Cashew nuts, then raw cotton, silk, is rarely which comes, So 9(3) is applicable for this. 9(3) services, 14 services are there. We are going to talk about GTA, advocate, sponsorship we'll touch upon, and director service, and we talk about author, music composer if required. Then we'll go to security services. We'll take only the major ones. GTA services, where RCM is applicable. GTA services it's a common service, that's why I'm taking this. If there is a receipt of GTA services, then the recipient is liable to pay GST, provided he is not charging GST at the rate of CGST at the rate of 6. That means assuming that the GTA is raising an invoice for 12%, RCM is not applicable. I'll repeat, if the GTA is raising an invoice with the 12%, RCM is not applicable. See, when the GST law got introduced, GTA made a representation. We should come under reverse charge mechanism. Yes, of course, no problem. Recipient will pay tax. Government agreed. GTA is a very strong lobby. If they stop the worker, nobody will get food there. So, they are very strong lobby under service tax also this was there. But they forgot to understand one important point. Under GST law, under service tax, they are not eligible to take the input tax credit of their vehicles, which would be huge value. Assuming that I have 100 lorries, you imagine the input tax credit which I can avail by charging the clients. Under service tax law, it is not possible because you cannot set it off your motor vehicle against the services. Now what happens? They realized it. They said, no. Give us an option to charge. So government said, you charge 5% without input tax credit, which is a useless provision to my mind, or charge 12%, that is 6% CGST, 6% SGST, avail input tax credit. So what happened? They can charge you and the recipient can avail the input tax credit. Anyway, it is not cost to me. My blocked input tax credit is getting encashed by way of charging the thing. That is what they came. So you have to be very careful. If they are charging 12%, RCM is not applicable. If they are not charging 12%, RCM is applicable. So this is applicable to whom? Any registered person, and even if it is not even if it is a not registered person, still it is applicable to factory, society, cooperative society, body corporate, then AOP, partnership firm, all these parties it is applicable. In such cases, if there is a reverse charge mechanism liability, the problem comes from the section 24. Section 24 says compulsory registration for whom? Where there is a reverse charge mechanism payable, then you have to get it registered mandatorily. Assuming that I am a partnership firm having, say for example, 15 lakhs turnover, if I am availing the GTA services, I have to get it registered. Why? I have to discharge the reverse charge mechanism. So be careful with this. Advocate services, we already discussed this. Advocate services, yeah.
What if the GTA is actually, something which I get as a questionnaire on a regular basis?
No, GTA?
What?
What do you mean by GTA? That's what you're asking? Sorry, I didn't get your point. See, GTA means Goods Transport Agency, where they will issue a consignment note. If they are not issuing a consignment note, that cannot be called as a GTA. So basically that. Now, RCM, advocates. See, there are two services which advocates are doing. Assuming that I am going to the advocate, he is giving me a service in his individual for my personal, it is exempted by way of 12 bar 2017, exempted services. If I am a body corporate and any business entity, if I am a body corporate, I am in the business and I am going and taking the business, whatever, litigation services from him, then such person is liable to pay GST. So there are two advocate services. One is forward charge, which is exempted for normal people like us. Two is business entity, where business entity will pay GST. Sponsorship. I'll give you an example where one of my clients who sponsored IIM, he's an IIM alumni. So what he did, he sponsored one program for say 5 lakhs. He said, he was casually talking to me and said, I paid 5 lakhs for the sponsorship. I said, sir, out of his company only. I said, sir, you have to pay reverse charge mechanism now. He said, why? I'm just paid 5 lakhs. No, you calculate the GST on that and reverse charge mechanism, it is applicable because 13 bar 2017 will hit you. So please be very careful. So sponsorship services, you have to pay GST under reverse charge mechanism. Now government services, I am not dealing all this. Artist, etc. Artist, what happens is, any author, any photographer, artist like that, they are people who are not well aware of this GST provisions. See, for example, an artist, he will draw the pictures. See, I have a client who is an artist, actually, very famous artist, and some of his pictures are sold at 50 lakhs. If you look at the picture, you will understand nothing. You will understand, literally you will understand nothing. Actually, as when we become close, he gifted 2 pictures to me, which is there in my room actually. So every day when I come and sit in my room, I can see the picture. It was very confusing for me to understand what exactly it means. And he will come after 1 year, when I asked him, talked to him, so what is this picture is all about? The picture was looked like a cat to me as a common man. But he gave me an explanation for half an hour saying that it is a pregnant lady who is holding the baby in the womb and the face is that side, this side. I got astonished. I understood that this is something which is not acceptable or which will not go to our head. I understood. That is why it is being charged extraordinarily. So he explained all this and then I understood. So if I asked him, how will you draw the pictures? Is it something like based on this art galleries and will come to you? Yes, art galleries will come to me, but they will not give a deadline. It's not based on deadline. Assuming that night 2 o'clock, suddenly I get a concept, I'll wake up and then draw the pictures. That is how they do it. It's not something like we are going at 9:30, 5:30 office time. No, nothing like that. He will get up, you should visit his house actually. It is something different, the pictures and the colorings, etc. etc. So it is something like that. So you cannot expect them to be compliant with the GST law. Correct? That is why they are saying, no, recipient, the art galleries should discharge the liability or music production, whoever. Now let's go to the security services. Security services, which is recently inserted, they are saying services provided by way of supply of security personnel provided to a registered person. Look at that very carefully, to a registered person, not to an unregistered person. Registered person, provided nothing contained in this entry shall apply to blah blah blah. Supply to any person other than a body corporate. Recipient is what? Registered person located in the taxable territory. Now, during the break, I think sir asked me, this residential association would like to engage some security services. I hope, I presume that your association is not registered. Okay. Assuming that your association is not registered, fortunately this is coming into your escape because you are not registered, so RC is not applicable. Assuming that most of the 13 by 2017 list, this 14 list items, where they are not using the word registered person, they are using the word recipient. Fortunately, they inserted with a little more brain, they inserted and said that no, it is only for the registered person. So in your case, sir, that association will not be liable to pay reverse charge mechanism because you are not registered. Second point, any person other than, assuming that your company is registered and you are receiving it from any person other than a body corporate. What is body corporate? That again become a problem. Body corporate means what? Is it partnership firm is a body corporate? individual proprietors. So body corporate is not, you have to go to the Companies Act. Body corporate means which is a company which is incorporated under this act or a foreign company. So in my view, some people ask me, LLP, will it come under body corporate? If you go to the Companies Act definition 2013, no. So please ensure that security services with effect from 1st January 2019, that is very recent notification which has been inserted. So you have to handle this. So these are all things which we have already discussed. I have nothing to add because these are all services where those are the services in the levy section. You can see transportation, all these things we've already discussed. Now, any questions? Or you wanted to, I will give you two more options. One is 1 o'clock we'll sharp, 1 o'clock we'll stop. 11:30 sharp we stop. Now we have 6 more minutes. I'll give you two options. I can take you through some case studies, maybe 1 or 2. Option number 2, I will give you the entire floor to you. You can ask me any doubts subject to this, my topic. I can help you out with other topics, but since other speakers are there, I will ensure that I will speak only that particular thing. So you tell me what is to be done. Sorry, case studies? Okay. Because now you all are enlightened with complete GST provisions from 7 to 13. Now, I don't have to answer any of this. I'm sure that all of you will be able to answer the question. So, case study will be like that. Within 2 minutes, we'll finish off everything. Let's quickly go. First case study, goods forward charge. See, if you look at it, you can put all whatever you discussed into 6 categories. Forward charge goods, forward charge services. Good service transfer to branch or agent. Okay. And next is import of service, RCM, and transfer disposal of business assets. That's all. That is the only 6 case studies. First one, goods forward charge. KSK, a bearing manufacturing company, sold bearings for a consideration of INR 1 crore to Miata Motors Corporation Limited for manufacturing of vehicles. Is it a supply? Don't look at the answer. Is it a supply? Which section? 7.1a. Clear? It is coming under 7.1a. Correct? Assuming that the consideration 1 crore is not there, is it a supply? Assuming that I am selling my bearings for no consideration, nobody will do it, but still, just an assume. No consideration is there. Is it a supply? No? No, correct? Because it is falling into, is it an import or service? No. Is it falling into schedule 1? No, because it is not related party, right? So there is no way that it can be taxed if there is no 1 crore consideration. Correct? Consideration we have studied in the Contract Act that even if 1 rupee is a consideration, right? So we are very clear. This transaction we ruled out from 7.1c, 7.1b. Because it is not import or service, it is not falling into schedule 1, that 4 transaction, no, they are not related, there is no disposal or something, and you have to see schedule 1, para 1, is it a sale or is it actually a disposal? Where you have availed input tax credit, then you will have an issue. You have to be very, very careful. When you say that you are disposing it or you are transferring, where stock is your input tax business asset, stock is your business asset, agree? So when you are selling these bearings, where there is no consideration but you have availed an input tax credit, don't you think that para 1 of schedule 1 will come and hit you? Don't you think that? Yes? Correct. So even if there is no consideration, you have to go and check your schedule 1 and rule out that possibility. If you are ruling out that possibility also, then there is no impact. And who has to levy GST? Is it a forward charge or reverse charge? Forward charge. Which section? 9.1. Clear? Because 9.2 cannot come because it is petroleum products. 9.3 cannot come. 9.4 both are reverse charge. 9.5 is e-commerce operand. So only 9.1 can come. Now, when to raise an invoice? It is a supply of goods. Assuming that now consideration is there. When to raise an invoice? Before or removal of goods. Agree? Yeah. So, but you have to give a due care from 1st April 2017 till 14th March date of payment, that you have to be very, very careful, because during that period the time of supply will be, if you receive any advance, because that notification 66/2017 came only with effect from 15th of November, so you have to be very, very careful there. What is the time of supply for these goods? Assuming that this transaction is happening today, what is the time of supply? Invoice date. Agree? So I think all these questions are answered by you only. We'll answer it once again, because is it a supply? Yes. If there is no consideration, is it a supply? No. But you have to also see schedule 1. Who has to levy GST? Supplier. Who is that? KSK. And is it not in the course of business? Will it be a supply? I didn't ask here. It is not in the course of his business. Will it be a supply? No, right? But generally these are all companies where they are registered, but I am just hypothetically, because that's why I didn't incorporate. It has to satisfy two conditions we already discussed. It should be in the course of business and consideration should be there. Now let's second case study. Because now all of you are thorough with the provision. That is why I am able to take you through the case study very quickly. Second one, service forward charge. Sikensi consulting firm in India provided services to Infosys Limited for a consideration of INR 1 crore. It's not Infosys and Cognizant, okay. But it's a combination of, it's a different company altogether. Because it's always, you have to find out the names of the companies to bring out to the case studies. Is it a supply? Which section? 7.1a, agreed? Is it a supply? If it is a supply, if there is no consideration, will it be a supply? Will it be a supply? No consideration. I am just providing service. Infosys and then the Sikensi has nothing to do with each other. Will it be a supply? Para 1 will be only for goods, right? Where ITC has been taken, not for services. So no consideration, no GST. Who has to levy GST? Forward charge, Sikensi. Then when to raise an invoice? When to raise an invoice? No, 30 days. That is reverse charge mechanism, only 30 days, 60 days. When you have to raise an invoice? Within 30 days from the date of provision of service. Or before that also you can raise. What is the time of supply? We discussed, if invoice is raised within the due date, then that invoice date, if the payment is received in advance, then that will be the time of supply. Or if invoice is not at all raised or raised after the 30 days, then date of provision of service. Very good. Okay. Okay, I think this case study is also over. The new people are all very, fast in the manner in which you are answering it. Now let's go to the branch transfer. ABC Limited has transferred its goods from Chennai to Gurgaon. No consideration is paid. The company is registered under GST in both the states. Is it a supply? Which section? Which section? There is no consideration. Schedule 1. Yes, because it is coming under 7.1c. Correct. 7.1c read with schedule 1 para 2. Correct. Where it is a supply. No consideration, no problem. It is a supply. If it is a supply, there is no consideration. Okay, I think that is already mentioned. I just combined the agent also here so that we can finish it off. Who has to levy GST? Who has to levy GST? Chennai branch to Bangalore branch. Chennai branch? Yes, very good. When to raise an invoice? When to raise an invoice? I am doing a stock transfer. When to raise an invoice?
Date of issue of
Before the removal or at the time of removal of goods? Then what is the time of supply? 12.2. What is the time of supply? 12 subsection 2, which says invoice date, right? We have seen now a few minutes back. Value of supply You have to go to section 15, read with rule 28. Anyway, another speaker will take you through that. And here I would like to mention couple of points. This canteen services, we already discussed the Caltech air rolling. I would like to also talk about Columbia Asia Hospital air rolling. See, one of the another mistakes which I have seen, I think I am just crossing the time, I think, 3 minutes past. You want me to continue for another 5 minutes so that we will close this? Okay, fine. So, with your permission, I will take about 5 more minutes. Air rolling Columbia Asia Hospital, this is a general practice. Out of 99% companies, out of 100, are not complying with this. There is a cross-charge concept. Most of the companies, their head office will be located in Chennai or wherever it is. Branch will be there. What will happen? CEO, CFO, HR, everybody will be sitting in Chennai, will be providing service to another branches. You may be wondering, what are you talking about? It's my own company under the same pan. How can it be different service altogether? You apply the same concept to your stock transfer. Your own stock, your own company, your own branch, what is the supply there? So here also they are saying, even if you are all same, supply will be applicable, you have to raise an invoice. Better go and utilize the second proviso of valuation. If the other party is able to take the full input tax credit, use second proviso, whatever invoice value will be considered as a open market value. So please ensure that you are raising an invoice. What is the issue here? Here is, now if you are doing a post-mortem, you have to disclose your invoice in the GST 1, which would have been already closed. So please ensure that at least now, that we can litigate at later point of time, at least now you are having a cross-charge invoice for the financial year 17-18. One cross-charge, you put some number for the time being. At least you don't want to pay too much, make it as 10,000 or 1 lakh or something, take the cognizance of second proviso if the other party is able to take the full input tax credit. I am repeating, full input tax credit. Anyway, valuation rule, at that time they will take the thing. Now, RCM, import of services. Cisco is a startup global software company not registered under GST. Cisco is not registered under GST. It constructed a new building where the design services are imported from a company in USA for a consideration of 1 crore. That is, Cisco is a company which is not registered because all his services are exempted for a moment. Whatever it may be the reason, they would like to construct a new building in Chennai. So they are importing the service, the construction, design, everything from a foreign company in USA. Now, is it an import of service? Service is a supply? Import of service, it's a supply, right? That is coming under 7(1)(b). Now, will your answer be different if the house property is constructed by the MD for his personal use? That is, MD is paying out of his own pocket and it is for his own house property. Will your answer be different? Still it is a supply, right? Need not be. There is a consideration. Need not be for business. Is registration required for the startup and also for MD? Section 24 says yes. Reverse charge mechanism you have to register. What is the time of supply of service under section 13(3)? Date of payment or 60 days from the date of that company's invoice or any other document issued by the company, whichever is earlier. When to raise an invoice under RCM? 13(3) F will say, assuming that, this I did not mention, assuming that you are raising an invoice, you are transacting with an unregistered party, you are raising an invoice. The section 31(3) F talks about invoice. That says date of receipt of goods or date of provision of service. From that date you have to raise an invoice if it is from an unregistered person. Then just keep it in mind when to raise an invoice. That has nothing to do with the other aspects. 31(3)G talks about payment voucher. That I already told. You have to go and read it along with the rule 52. What are the contents of payment voucher is given there. Now, will your answer be different if the design is developed from a company associated enterprise which is into construction business abroad? Assuming that, I recently had an opportunity to go through one company which is called Dogus company, Dockers and Holdings, which is having multiple, business segments, construction, etc., etc. Assuming that Dockers is having a company in Chennai, which is actually a software company, but they can avail the import of this construction design service from their own construction wing, which is an associated enterprises. That being the case, when you are entering into the books of accounts, we already discussed this holding company, subsidiary company, where the moment you enter into the books of accounts, that will be the time of supply. So, now RCM we already discussed. The Anish Salve case we have already discussed. The last one is sixth one, transfer or disposal of business asset where ITC has been taken. This we already discussed. I told that this is our own case. RC is a firm of chartered accountants having a NGO as their client. RC donated in March 2019 a brand new laptop purchased in December 2000. It's actually December 2018. I just normally mentioned December 90. ITC on laptop was already taken. Is it a supply? Is it a supply? 7-1. It is wrong actually, not within the list section. It is there is no consideration involved there. Is it a supply? There is no consideration, no. Is it a supply? It is a donation. There is no consideration which I paid. I just gifted my laptop to that NGO. Is it a supply? Correct. Input tax credit has been taken, so it will be a supply. Time of supply, it is a goods. Go to section 12.2. Okay. Documentation. Invoice has to be raised. Value, you have to go and pick it up from section 15. Now next faculty comes for valuation. At that time you are already aware of sections, rules, etc., etc. I think I am done with my presentation on all the topics, and then all the case laws are also being dealt with. So I am happy that I could complete within the 3 hours time. We could complete the entire thing, and I want you to share your email IDs with, I told you, you share your email IDs. My presentation has not been printed in that. I can send it across to you. I request somebody to collect the email IDs. I don't know whether if you can start your email, write your email IDs, write it in capital letter, because it is very difficult, sometimes it is getting bounced. I'll ask SARC to send my presentation to all of you, and any doubts you are having, you can ask me now. I'll just take 2 minutes. Yeah, please sir. Sorry?
Lawyer firm.
Yeah.
So they registered under GST.
Yes.
So I said, because of being a partner, whether to register or not.
Yes.
Ultimately, one partner want to register in case they want to export a service. They do.
Yes.
They registered, but they filed only 1 month return.
Yes.
After they not filed, they do it. Sumoto, they cancelled.
Yeah.
Then we went and pleaded because there is no obligation to collect service.
Yes.
That was our CM basis. All the services are provided to business entities.
Yes.
Now, while filing return, these invoices that we upload in return because those are not subject to GST in my hand.
Yeah.
Only the business entities are there.
Yes.
In the return itself, there is no provision to include these invoices.
Yes.
That was the reason we left it.
See, the sir's question is, there is an advocate firm where they are raising invoices without GST, and some of the services are exempted, some of the services are, it is coming under reverse charge mechanism. Do I need to register? First point. Yes, sir. If your aggregate turnover is in excess of 20 lakhs, you have to register. They already registered, no problem. Do I need to file returns on a monthly basis? Yes, you have to file your monthly returns because you registered. You have to comply with section 39, 39, 40, everything you have to file. All sections under GST Act will be applicable the moment you get into it. So there is no question of not filing returns. If you look at the annual returns also, you can see that tax payable under reverse charge mechanism as an outward supply. You have an option to declare it in the returns. So in my view, you have to continue with your registration and you have to declare. Obviously, there is no tax impact. There is no tax impact, but compliances have to be there. Any other questions? No questions, huh? All of your experts in GST know that. Any questions? No? Okay. Thank you so much being the wonderful audience for this particular program. Thank you.
Good afternoon, friends. I thank CA P.T. Rajiv for his excellent presentation on provisions of GST levy time of supply and point of supply. As a token of appreciation, a small memento from SVRC.
He is a regular visiting faculty in the Staff Training Institute of Commercial Taxes Department. He is also an author of the book Handbook on Tea and VAT Audit for Professionals. With this prelude, I present before you J. Murali sir. Please put your hands together to welcome the speaker. Over to you, sir.
Vanakkam. It is a proud privilege to address you all. I thank Mr. Rahman for introducing me to this group. It is generally taking returns is difficult, and that too in the afternoon after a sumptuous lunch or after a session in the morning. Taking GST return will be a difficult task because I should not disturb you. At the same time, you should not disturb me. It is a mutual agreement that I will not disturb any of you. At the same time, you don't disturb your neighbor. If you want to sleep, you sleep. But generally, my voice level will be to a bit high, so it will not make you sleep. And it is always a wonderful thing to address on the afternoon. Why? Because generally the audience will not trouble in the afternoon. If it is a morning session, everybody will ask question. But in the afternoon, generally, that too after lunch, you will relax for some time. So I don't know why the institute is always asking me to come only after lunch. Probably not to make you sleep. So job work, per se, the person who will not pay tax on any act. Before 1/7/2017, a job worker will not pay tax under VAT. Why? He will say, sir, I am converting the raw material of my principal and returning back the raw material to the principal. Even I account for the scrap available and transfer the scrap available to him. It is only a job work, pure labor, not liable for VAT. In those days, VAT was handled by state government, and the state government will take care of VAT, central government will take care of service tax. After hearing this, the service tax authority will go there. He will say, sir, you spoke to VAT officer and said, you are not doing any VAT transaction, it is only pure labor. As per the definition of service tax, when you do pure labor, you are liable to pay service tax to me. Can you pay now? He will ask. Immediately the job worker will reply, sir, you have thoroughly misunderstood the provisions of the Act. The Act says, when I do manufacturing activity and when I am below the threshold limit of 1.5 crores, even though it is a manufacturing activity, I need not register under excise and service tax. So, I am not liable to pay service tax because I am doing manufacturing activity. The service tax provision says when you are doing manufacturing activity, you need not pay service tax. And under Excise Act, it will say when your turnover is below 1.5 crores, you need not pay excise duty. And always his turnover will be less than 1.5 crores, whatever work he does. And incidentally, because of this, the brand of job worker were not paying tax under the STY indirect taxes. So while drafting the GST Act, they have carefully eliminated the confusional points, and instead of suggesting some methods, the GST Act prescribes. You have to understand the difference between prescription and suggestion. Which as a chartered accountant I can only suggest, but a doctor will prescribe. The difference is chartered accountant will suggest. It is up to the client to take it. Normally they will not take it. Whereas if a doctor says prescribes one medicine or one treatment, the patient will have to undergo. Otherwise, he may not survive. GST is like that. It will only prescribe. It will not suggest. So it has given various provisions. I will discuss the provisions and I will discuss various methods given in the Act. First session I will discuss the job work. Then we will go to returns. I will discuss 3B and GSTR1 at length and explain GSTR2A. If time permits, I will take GSTR4. Because normally if a person calls you for a meeting, you should not say I will talk for this amount of time. You will have to ask them, how long will you sit? Because one person was invited to address a meeting. Immediately he said, okay sir, I will take up from 5 o'clock evening to 9 o'clock or 10 o'clock. Immediately the organizer said, no problem sir, you can go to any number of time, but we will sit up to 7 o'clock. So that should not happen to me. So I will complete everything by maximum 5:15 or 5:30. Maximum. In between we will have question answer session. And it will be very interesting to note that the heads which I am going to discuss are meaning for job work, business model, rights, registration of job worker, documentation, transitional provision. Meaning of job work we will discuss. Then business model, it prescribes model. So the manufacturer or job worker will have to obey any one of the 4 models given or utilize any one of the 4 models given. Then registration, is it necessary or not, we will discuss. Documentation, what are all the documents required for job work, we will discuss and explain. Then transitional provision. Now the puzzle in your mind is, sir, the GST have been introduced on 1/7/2017 and now we are in March 19. So already about 1.5 years are completed, or 1 year and 9 months over. You are talking about transitional provision in the presentation. Is it fair? And you should not think that I am filling the gap. The reason being, for the first year we are yet to file the annual return. I don't know when you are going to file. Now they have given time up to 30th June. The software is also released. Normally, if you see in the GST, if you count the number of days from 1/7/2017 till date, per day you will be having at least 3 notifications. You have to consider all the notifications for preparing the annual return. And for your information, about 1/3 notification will be extension of time. So you can leave it. And the balance 1/3 will be overruling the first notification. So interestingly, you will have to read, enjoy, delete. So the concept of learning tax should be read, assimilate, then override. Next provision. If you assimilate the current provision, you can override the next provision. And interestingly, if you are practicing chartered accountant, you cannot override just like that, but you have to record it somewhere else. So all these things will have to be done in an interesting way. And in my session, generally I don't address anything by section. However, today I will give some sections to you because I should show you the section code number. But section is not required, you understand the subject. If you listen to this full lecture, you will understand the required thing and definitely you will ask more questions. So we are going to discuss the definition in 2/68, then input tax credit under 19, then transitional provision 141, job work procedure 143, interestingly delivery challan. Delivery challan, what is the delivery challan? It is a document used to move the goods, right? It is a document used to move the goods. And do you know what is e-way bill? E-way bill. it is also a delivery challan prepared by the server. And interestingly, when you prepare e-way bill, it will automatically update your return for the next month. Your GSTR1 will be updated with the e-way bill figures. And in GST, everything is interrelated. You have to understand all the points, assimilate the points, then you can utilize in an easier way. The job work definition, wonderful definition, is inclusive definition. Job work means any treatment process undertaken by a person on goods belonging to another registered person. Job work is a work undertaken by a person. It is not called as a registered person, right? But the goods should belong to a registered person. That means the principal for the work should be a registered dealer. For example, if I am giving some work to my friend Surendra Nahar, who is sitting in the first bench. So if I send some goods for job work to Surendra Nahar, I should be a registered dealer. Then only he can take the goods whether he is a registered dealer or not. Right? The person who gives the work, who gives the goods should be a registered dealer and must be a registered dealer. But the job worker need not be a registered dealer. Why? Because he is coming under threshold limit. What is threshold limit? 20 lakhs gross turnover. Gross turnover is turnover credit side of your P&L account, except interest. Right? Even your scrap sales will also be taken. Except interest, everything will be taken. Okay? So it is an inclusive definition belonging to another distributor. The expression job worker shall be construed accordingly. When they give the specific work, what we will say, sir, my work is not listed there, therefore I am not liable under your job work provision, and I will avoid paying tax, or I will avoid reporting the transaction. To avoid this, they have given an inclusive definition. The inclusive definition says, when a person works on the registered person's material, it is a job work. Whatever work he does, conversion or rectification or whatever you may call. So the job worker per se is defined in a very easy way. For example, I am sending goods to Surendra. Okay? What I will do? I will purchase the goods from a registered dealer Lakshmanan. He is sitting in the last bench. He is from our institute. So I am purchasing from Lakshmanan, who is a registered dealer. He bills on me, J. Murali, and I have given my GST number to Lakshmanan. He is a good dealer, he will file return. Okay? He collects tax from me. He has sent the goods to me. The raw material is ready, and I don't have enough capacity to convert it into finished goods, for which I am sending the goods to Mr. Surendra Nahar, who is sitting in the first bench. If Surendra Nahar is a registered dealer, when he converts the raw material into finished goods, he will definitely charge me some charges, right? For his job work, he will charge me some charges. If he is a registered dealer and he has crossed the threshold limit, means he will charge a tax on me. Now you understand, I have done first transaction with Lakshmanan, who is a registered dealer. I have purchased goods from him, right? Naturally, I will get input from Mr. Lakshmanan's transaction. The job worker is also a registered dealer. I have done transaction with job worker. He raises a bill, and that bill comes to me. He converts my raw material into finished goods and send back the goods to me. This transaction, you will have to be very clear. I am not converting the goods into finished goods, but my friend converts it into a finished goods. The bill charged by him when he is a registered dealer will have CGST and SGST, assuming that he is in Chennai. I am in Chennai, he is in Chennai. Okay? I will take input on the material purchase and also input on the job work bill. As a principal, I will get two input, right? Provided I make payment to both. Another section under section 19 says if I am not paying within 180 days, the input which I have claimed should be submitted to the government with interest. Okay? So our understanding is I am properly paying to Lakshmanan, and Lakshman is a proper dealer, he files the return and pays the tax. Similarly, Surendra Nagar is a registered dealer, he pays the tax. If both pays the tax, I will get input on the goods and also the services. I will not have anything to lose. Manufacturer sends goods to job worker. I will claim input on the material and also on the job worker. And there is another section called section 9.4 which talks about reverse charge mechanism. You will have to understand what is reverse charge. Reverse charge mechanism is a mechanism where a registered dealer effects transaction with an unregistered dealer. He will have to pay tax this month on the transactions effected to an unregistered dealer in his accounts and can claim input tax credit in the next month. Instead of forwarding the charges, I am paying charges on the unregistered dealer transaction. This provision was available from 1/7/2017 to 12/10/2017. Kindly note down the dates, because if you are finalizing your books under GST for the year 17-18, the dates will play a vital role. The amendments will give effect from 1/7/2017 to 12/10/2017, including both the days. During this period, any transactions affected to an unregistered dealer, the registered dealer will have to pay tax voluntarily in his return. If it is paid voluntarily and declared voluntarily, he can claim input in the next month, right? Assuming that my job worker is not a registered dealer and I have effected transaction on 1/7/2017. When he is a not registered dealer, he will not pay tax, right? In that situation, I will have to pay tax on the reverse charge. This is model number 1. Do you have any doubt in this? No doubt, because very simple. This is simple. Then next method, there is a concept called bill to ship to under GST. For example, I will bill to Lakshmanan and send the goods instead of Lakshmanan to Surendra. It is called as bill to ship to. Coming back to our own example, I am placing an order with Lakshmanan to supply raw material. Okay? In the first instance, he has supplied goods to me, raw material. Then I have once again sent it to Surendra. I would have paid two freight. I would have lost time. I would have incurred cost. And I would have paid a reverse charge mechanism on freight twice. Because section 9.3 says the expenses in the form of freight, advocate fees and the director sitting fees are liable for reverse charge mechanism. The recipient of the service will have to pay tax this month, claim the credit in the next month. This 9.3 is not subject to any stoppage. Only 9.4 is stopped till 12/10, stopped on 12/10/2017, and it is now reopened on 1/2/2019. They have said for notified services and notified assessees, reverse charge mechanism will come into force from 1/2/2019. For the benefit of all of us, they have not notified the assessee or services. You will ask me, then what is the necessity to amend like this? Because the amendment given in the GST will have to have a counter amendment from all the state act. Counter amendment from all the state act. See, for example, one amendment comes from CGST, means Tamil Nadu will have to generate another gazette for SGST. Then only it can be implemented. Okay? So for the sake of benefit, they will introduce an act and notify the date later. In the meantime, all the states will amend their record or amend their act. You have to understand this point. Under the GST provisions, all the provisions will be implemented, then the date will be notified later. Okay? And incidentally, this 1/2/2019 has been amended, and the liability for whom to pay the reverse charge mechanism is not notified till now. And services for which attract reverse charge mechanism from 1/2/2019 is yet to be notified. So we will forget that and we will go to the second method. So I have ordered Mr. Lakshmanan to supply goods, and I have said, you supply to my job worker Mr. Surendra Nahar. He will give the bill to me, right? Send the goods to my job worker. By this, the time taken for getting the goods from Lakshmanan sir and sending it to Surendra sir is saved. And he will get the goods in time, he will manufacture in time and send the goods to me so that I can supply to my customers in time. The time is the best essence for the transaction. And if you take Hyundai, that is Hyundai Plaza, Hyundai company near Sriperumbudur, there are about 40 to 50 Korean companies which are all doing the work like this, job work like this to Hyundai, exclusively to Hyundai. There, the concept is the Hyundai will not hold too much of stock. They will say, you send me 2 weeks stock. You need not supply me 1 month stock in earlier. So I will place an order with my job worker to send the goods in time to the Hyundai, right? So for this, the method of bill to ship to is introduced. In this case, even though I am not handling the raw material, I will get input on the raw material because I am a registered dealer and Mr. Lakshmanan is also a registered dealer. And interestingly, when Surendra is a registered dealer, he will charge me tax on the labor charges. And now he will think that from now on I should not give my name to the speaker because it is used too much. And unfortunately or fortunately for him, I know him for the past 20 years nearly. So I will have to use his name. Otherwise his brother will shout at me. In the given transaction, I will get input on the goods sent by Lakshmanan to Surendra, I will get input. And wherever Mr. Surendra bills, I will get input. Wherever he is not a registered dealer, I will have to pay tax for him in my account. I will not pay in his account. I will pay in my account. I will declare this as RCM turnover this month and take credit in the next month. Right? Why this is done? Because if he is an unregistered dealer, the revenue will be lost to government. To avoid this or to plug the tax loss, the government have introduced a new scheme called reverse charge mechanism. Actually speaking, it is not a new provision, it has been taken from Tamil Nadu General Sales Tax Act, which was before TN VAT Act. The provision was taken from the TN GST Act to our GST tax. Here also, when Mr. Anand, that is Surendra, is not a registered dealer, I will be paying the tax and I will take input on both. In all these two types of transaction, the three parties involved in the transaction will have to declare the turnover. Right? At least I will declare the turnover. As a principle, I will declare the turnover. So it is a circle or cycle where all the transactions are booked. That is why everybody say because of GST the liquidity is lost. Everybody says like that. But your World Bank says India is improving. Why? Because all the transactions are accounted for and taxes paid on the transaction. If you look into this transaction, Mr. Lakshmanan will pay GST and also income tax. Mr. Surender will pay GST and income tax. I will pay GST and income tax. So all of us will pay all the taxes. When everybody pays the tax, revenue will increase. Your per capita income of India will increase, right? That is why the GST is objected. Because once if you declare GST, you cannot avoid under other act. The third method, very interesting. I am placing an order to Mr. Lakshmanan and asking Mr. Lakshmanan to supply to Mr. Surender, my job worker, right? Then, after completion of the work, this is a different issue. I am supplying goods to my job worker. I am purchasing from Lakshmanan, taking it into my stock, taking the goods to my place and sending the goods to Mr. Surender for job work. I will register Mr. Surender's place as my branch. Why? If I register the place as my branch, I can effect my invoices from his account, from his place, right? Our இடத்துல register பண்ணிட்டேன்னா that becomes a branch. From branch I can effect sale, nobody can question me, right? So in this third example, the material received will be dispatched from principal to job worker. Job worker will convert the material and the principal will bill from the job worker's place to the customer, end user. The goods will directly go to end user. So you are saving time in every transaction. Okay? So in the meantime, if a job worker is not a registered dealer, automatically you will have to pay reverse charge mechanism. Very important amendment here is I will have to register the place of Mr. Surender as my branch. That does not mean Mr. Surender will have to manufacture only for me. The GST provides for that. When I take his place as branch, it is exclusively for my transaction. At the same time, our friend Rahman also can send goods to Surender. He will do job work for Rahman also. And if need be, Rahman can register in his place also as his branch. So the branch is in existence only for limited sense, that is only for my transaction, right? So that I can avoid the freight, I can avoid the wastage of time and I can supply in time to the manufacturer so that the production cycle need not be stopped. So that is the third method. Fourth method, I am ordering to Mr. Lakshmanan, asking him to supply to Surender directly. Then Surender will manufacture the goods, then he will supply to the customer. I will bill from Surender's place for the transaction. As a principle, I will not receive the goods. I will not see the goods, but goods will go to my end user. For this, I will have to register the place of business of Mr. Surender as my branch. So these are all the four methods prescribed under GST for a job work. Other than this, if you have any method, you will have to fine tune that method to any one of these four methods. Job worker, when his turnover crosses 20 lakhs, will have to register. Then in case of interstate job work, threshold limit will not apply and it has been amended subsequently. Job worker will pay GST on labor charges if registered. Manufacturer will pay GST on labor charges. Job worker is not registered. And interestingly, you should ask one question, sir, what will happen to the scrap? Scrap will be there, no? Any manufacturing activity, scrap will be there. That scrap can be disposed of by the job worker, or he can send to principal. But anyone should report that and pay tax. Normally, job worker will sell the product as a scrap and send the money to the job worker. That money to the principal. Because it is a product of a principal, no? Whatever comes should go to principal. If the job worker is not a registered dealer, scrap will be sent to principal for effecting sale. Or if job worker effects sale when he is not a registered dealer, principal will have to report in his turnover and pay tax on that. Jewellery, goldsmith will also come under the job work, but normally job work transaction is assessable at 18%. It is reduced to 5%. Why? Because jewellery is taxable at only 3%. So job work on jewellery is 5%. Input tax credit on goods for job work and on goods used by job work. Goods sent and goods used by job worker. There is a time limit. When I send some raw material to the job worker, he will have to return the finished goods within 1 year. If he is not returning the goods within 1 year, my first transaction will become a sale transaction. I will have to pay tax, but I will not get input tax credit. Similarly, I may give some machinery to my job worker for doing the work, right? Normally, the Central Excise Act says the goods, that is the machinery given for production, should be returned once in 6 months. But it was not practiced by the job worker and the manufacturer. If you have seen many accounts, they would have made the job worker would have created the mold. The mold will be with the job worker. He will use the mold for conversion and raw material into finished goods. But the principal will claim depreciation on mold. For claiming this under the GST Act, you will have to return back the capital goods once in 3 years. And for which you will have to generate e-way bill, because machinery will be costlier. If it is within Tamil Nadu, e-way bill should be raised when the transaction value is more than 1 lakh. If it is outside Tamil Nadu, e-way bill will have to be raised if the value is more than 50,000 rupees. It is intrastate 1 lakh, interstate 50,000. The delivery challan is nothing but your invoice, because the delivery challan should give the details about the name and address of the consignor and consignee and their registration number, if any. Then the date, a serial number, value of the goods, commodity consigned, commodity returned, reference to the delivery challan received earlier and returned back, it should be correlated. Then comes value, then taxation, then total value. All these details should be available in delivery challan. If it is stopped by an officer, he should be in a position to ascertain the goods, whether it is correct goods or not. And interestingly, more specifically, the GST documents need to be signed. Normally we will see in computerized invoice that the invoice is a computer generated invoice, signature is not required. In many invoices it will be typed. But GST says it should be either signed by physically or by digital signature. If it is not done, the recipient may not be given the input tax credit if the officer questions. So similarly, the delivery challan should be naturally signed and the place of supply should be mentioned. What is place of supply? If I am sending from KK Nagar to Tenambet, I will have to mention I am sending the goods from KK Nagar to Tenambet. Then when he returns back the goods, he will have to send Tenambete to KK Nagar. That place of supply and date of supply is that is must. Similarly, taxable value, rate of tax and HSN code are to be noted in the job work, delivery challan. And the first copy is for the consignee, second copy for the transporter, third copy for the consignor. This is the format to be adopted. First copy always for the consignee, second copy for transporter, third copy for consignor. Why? Because normally the third copy it will not be legible. So you can have it for yourself. Government will need a legible copy to trace the transaction. So they need a second copy. And interestingly, the person referred in the consignee should get the original. So you should know what he has received. That is the normal procedure. But under e-way bill, probably somebody will be taking e-way bill. I will define what is e-way bill. E-way bill is a document or delivery challan generated by the server when the transaction is beyond a threshold limit. And there is no bar even if you generate e-way bill for all the transactions. E-way bill is not required when you are moving the goods by hand or without motorized vehicle. If you are moving a bullock cart, you need not put e-way bill. If you are moving by man-pulled cycle rickshaw, you need not prepare e-way bill. If you are moving the goods from your place to your neighbor's place or two doors after that, even then e-way bill is compulsory. That is the act. The act says for first 100 kilometers you can take 1 day. Subsequent 100 kilometers you can take 1 day each. And the goods should reach by 15th day. You cannot extend the time beyond 15 days. Okay? So the goods should reach the destination within 15 days. The GST Act was introduced on 1/7/2017. Whatever goods consigned before 1/7/2017 to a job worker should have been returned by 31/12/2017. If it is not received by 31/12/2017, no tax will be levied for the goods. Only the conversion charges will be liable for taxation. The labor charges of the job worker will be liable for transaction. Assuming the goods are received back after 31/12/2017, then it will be treated as a sale. Tax should be paid accordingly. For your own transaction, you will have to pay tax. No input for this. It will be useful for while finalizing the records for 1780. The transitional provision is only for 1780. After that, the goods were under the GST Act and it should be returned back within 1 year from the date of dispatch. If you take care of if you take an example of marble company, it will have generally a subsidiary company to finish the block. The rough block will be taken from the quarry by a principal company. The rough block will be converted into finished block by the sister concern or by the processing company. Even in this case, the goods consigned before 1/7/2017 are to be returned back by 31/12/2017. If it is not returned back by 31/12/2017, this transaction will also be treated as sale and no input tax credit. Some provisions may be stringent, but you have to know the stringent provision to understand the act. And there are certain job work where the rate of tax has been reduced from 18 to 5. Printing of newspaper. Your constitution says you cannot assess the sale of newspaper. Newspaper, electricity, etc. cannot be assessed under the Indian constitution. But printing of newspaper is liable for GST. That is why in the morning when you purchase newspaper, there is no GST on that. But in the evening if you put it for scrap, you will have to pay tax. The morning newspaper is a scrap in the evening, right? If you have seen morning Hindu, you would have enjoyed punt hitting so many runs and other things, so many sixes. Then the other match where Russell has scored a very good number of runs. Now it is a record. It is an old paper. In the evening it becomes scrap. When you sell the scrap, it is liable for taxation. Newspaper per se is exempted. Newspaper in the evening is a scrap, it is liable for taxation. Then textile yarn, textile fabric and garments. I will have to inform you, or I will have to give a very good interesting matter. I was asked to address in Tiruchengodu and Rasipuram. On the same day, first I went to Rasipuram, then I went to Tiruchengodu. I reached the venue where I was asked to stay in a hotel, and behind the hotel the chowdhury was there where the meeting will have to be conducted. I reached my room by 4:30 in the morning. It was too early and it was outside the Rasipuram, so I could not spend time. I was forced to see my laptop. Normally I don't take laptop. On that day, luckily I took my laptop, and also I was able to go to GST website. To my surprise, there was a notification at 12 o'clock in the morning, at 12 o'clock in the midnight, stating that from 12:01 the job work rate is reduced from 18 to 5. Job work on textile industry is reduced from 18 to 5. I saw that and closed the system, and I got ready. So by the time they came and took me for breakfast, etc., then we went to the meeting at 9:30. I was introduced like Mr. Rahman introduced me. Then after that, when I commenced my speech, first question, sir, what is the rate of tax for job work on textile? Luckily I saw that in the morning. I said, when did you build your transaction? He said, I have not billed. Then it is 5%. If you have billed yesterday night, it is 18%. After giving this information, you will be surprised. I was talking for the next 3 hours. Nobody disturbed me. Because all came there to confirm whether it is reduced from 18 to 5. And I made it very clear it is reduced from 18 to 5. I gave the notification also. Then the meeting went on very smoothly. There were about 600 delegates, and the association was happy because they collected money from everybody. Whatever they spent on me is very less when compared to what they collected. They were happy. Then I was taken to Tiruchengodu. I went to Tiruchengodu. There they gave me the nice visit to the temple there. Then they took me to the auditorium. After the introduction, there the crowd was about 650. Here 600, there 650. And at that time I thought, GST is also interesting. Because so many people are coming to listen to GST. And I was not expecting in a place like Rasipuram or Tiruchengodu to have 600 and 650 people to attend a GST meeting by a chartered accountant. Definitely I am going to say against them. Because I am going to give the act. I was very clear, if I go there, nobody will come. And so to my surprise, the hall was full. And in Tiruchengood also, after the introduction, they asked the same question. And I answered. After that, only I spoke for 3 hours. And suddenly one whisper came in my ear. He said, "Sir, no, konja late apuchana train poidum parvalliya." I said, "Oh, thank you very much." I went out. So the people are very interesting to note only the reduced rate. So whenever you go to your office in the morning, first work you should do is, after you are offering your prayer and other things, and signing your attendance, that is important. Then you will have to go to GST website. Whatever notification has come, you read that, make a note of it. Then you can do whatever you want. Because it will definitely affect you. Many notifications were unnoticed. So the rate of tax will be more. Jewellery I have explained. Printing of books. Job work on printer is a wonderful topic. If I take the topic, it will be confusing to you. But however, I will give the slides and explain how the job work is levied on printing. Printing of books is also 5%. Printing of all goods falling under chapter 48 or 49 will be 5%. இதுக்கு ஒரே என்ட்ரியா கொடுத்துடலாம்ல, ஆல் பிரிண்டிங் ஜாப் இஸ் 5% சொன்னா நம்ம கன்ஃபியூஷனே இருக்காது. ஐ டோன்ட் ரீட் 48 and 49. அது வரைக்கும் நான் புரிஞ்சுக்கணும் கரெக்டா. I may not understand what they have given. That may be given with reference to Excise Act. இதுதான் ஒரே கன்ஃபியூஷன். Processing of hides and skins and leather. For converting the raw skin into finished leather, there are about 14 processes involved. The 14 processes will involve chemicals. And interestingly, under job work, the job worker can also supplement consumables and materials if need be. It will be added to the total value of his job work. He will pay tax accordingly. If it is a regular job work, even for the material, he will have to pay 18%. Because under GST, you should know 2 types of pricing. Composite pricing, mixed pricing. What is composite pricing? When you take up naturally bundled 2 or more events or taxable events, the tax of the principal event will apply to the ancillary event. This is called as composite supply. I will give you a simple example so that you will not forget this composite supply. You are going by Shatabdi train. Shatabdi train, you know, AC coach. Taxable at 18% under GST. Whether you like it or not, they will provide some food. Normally food is 5%. But there it will be included in the cost and you will pay 18%. Traveling by Shatabdi to Bangalore and taking food are naturally bundled. The main rate is travel by train, that is 18%. So food will also come under 18%. This is composite supply. Mixed supply, very very simple. When 2 or more unnaturally bundled events are taken together, the highest rate will apply for all. Highest rate will apply for all. முதல்ல சொன்னது 2 taxable eventங்க. இங்க வந்து taxable event சொல்லல. 2 or more unnaturally bundled events. இதுக்கு என்ன எக்ஸாம்பிள்னா, இப்போ நான் இங்கே வரேன்னு நீங்க லக்ஷ்மணன் என்ன பண்ணுறாரு, சரி நம்ம சார் வந்திருக்காரு, he is giving a fruit bouquet. இன்ஸ்டியூட்டில் சொல்லி முரளி சாருக்கு ஃப்ரூட் பொக்கே கொடுக்கும், பிடிச்சா ரொம்ப பிடிக்கும், அதை கொடுத்துடலாம்ங்க. எனக்கு லக்ஷ்மணன் என்ன ரொம்ப பிடிக்குங்கிறத என்ன பண்ணுறாரு, ஒரு 1000 ரூபாய்க்கு வாங்கிடுறாரு பழம், நல்லா காஸ்ட்லி பழமாக வாங்கி ஒரு ஃப்ரூட் பொக்கே பண்ணி கொடுக்குறாரு. அப்போ இந்த ரஹ்மான் சொல்கிறாரு, அவர் கேட்பரிஸ் சாக்லேட் பிடிக்கும், யூ கிவ் சம் ஸ்மால் கேட்பரிஸ் சாக்லேட் ஆல்சோ டு ஹிம் அப்படிங்கிறார். தி ஃப்ரூட் பொக்கே இஸ் 1000 rupees, Cadbury's chocolate is 10 rupees. If both are packed together, Mr. Lakshmanan will pay 28% on 1010. Correct? Mixed supply, when unnatural events are bundled together, the highest rate will apply. இது ரெண்டும் தெரிஞ்சாதான் நீங்க ஜிஎஸ்டிக்கே வரணும். ஏன்னா இதுதான் ஃபர்ஸ்ட் லெசன் பாலப்படம். The rate of tax will be based on this. Now you slightly rewind your memory to Pongal season. At Pongal season, normally there will be pamphlet and a notification or advertisement and say, if you purchase textile goods worth 1000 rupees, you will be given a scooty. If such being the case, a scooty is taxable 28%, whatever textile you are purchasing is also 28%. And there will be some notification before all functions, all what I can say, functions like Deepavali, Pongal or Christmas, whatever you say. The paper, if you take the paper cutting and go and purchase from the shop, he will give something gift, some gift. Normally it will not be linked. For example, if an advertisement is like this, say for example Rin advertisement, Rin soap. If you purchase Rin soap worth 200 rupees, you are given a bucket free. Purchase of soap is main activity. Bucket is incidental to the soap. With water only you can clean the cloth, okay? So it is naturally bundled. Your bucket is normally 18% tax. If it is given with soap, it is 28% tax. So the pricing will have to be made by having the composite supply and mixed supply in your brain or in your mind. இதில் நிறைய நோட்டீஸ் இனிமே வரும். இந்த சாம்பிள் அவர் எடுத்து வச்சிருப்பாங்க ஆஃபீஸர்ஸ். The pamphlet sample will be available to the officers. As soon as you file your annual return, the officer can give notice for all these things, right? So very interesting. Manufacture of leather goods or footwear. Footwear is also reduced rate is there, and for to that is footwear worth about 500 less will be exempted. So the 5% tax is there. All food and food products are 5%. Why? The rate of tax for food is 5%. Then all products falling under chapter 23 of Customs Tariff Act. Manufacture of clay bricks. Wonderful area, clay bricks, because clay bricks is instead of 5%. So job work is also 5%. Manufacture of handicraft goods. It is 5%. Even the handicraft is exempted. Job work of tailoring and the manufacture of umbrella. Previously GST rate at 12% and it is reduced to 5%. If you see, if you happen to, that is, if you, before the GST period, if you have seen a cement purchase bill, it will be like this. Value of cement purchase 1 lakh. VAT 14.5% on 1 lakh. Coolie and freight 25,000 rupees. And they will say this is a post sale charge. I have effected cement sales and the customer requested me to take the goods to his place and deliver in his place. So it is a post sale charge not liable to be taxed under STY GST, VAT Act or TNGST Act. That concept is plugged here. They say whatever money you receive, it is naturally bundled. Cement and freight is naturally bundled, no? If you apply composite supply rules, the cement, that is, you have to take 1 lakh cement value, 25,000 freight, add the total 1 lakh 25,000, you have to charge 28%. If the freight is provided by the GTA, it is 5%. If freight is provided by the supplier, it is the rate of the commodity. Services of goods belonging to another person. Printing of newspaper, books including braille books, journals and periodicals, 5%. Services on goods belonging to another person, printing of all goods falling under chapter 48 or 49 is 12%. If you are printing the invitation for the marriage or your visiting card, there was one judgment called Salem Job Press judgment. It said there is no value addition in manufacturing my visiting card by the printer. Whatever manufactured should be given to me. He cannot use it. So there is no tax. That judgment was plugged by the amendment. They say if you are printing the material which is not included in the first item, then all other items are 12%. So if I get visiting card, or if I purchase visiting card and ask the printer to print, he will charge me 12% for the conversion job. If he puts paper and ink, then he will charge 12% on total value. Any ancillary services in relation to printing is 5%. That is binding, book binding, printing, etc. It will be 5%. Material supplied by publisher, 12%. Material provided by printer himself, newspaper 5%, any other thing 12%. So normal rate for printer is 12%. Normal rate is 12%. Only for newspaper, periodical, etc. it is 5%. This I have explained, so I am skipping this. Then special provision related. There is no time limit for bringing back molds and dies, jigs and fixtures. Job worker can sell them as a scrap on payment of GST paid by the principal. I have completed that also. Scrap generated during the job work may be supplied on payment of tax by job worker if he is registered, otherwise principal will pay. So thank you very much for first session. We will go to second session. When is your coffee break? Not at 3, no? Even they are ready with coffee, we will go to coffee after commencing our next slide. Yes.
Job work, they have notified some form to be filed by March, right?
Yes. ITC 4. You will have to file the details of job work sent and returned back by 31st of March. For the period ending 1/7/2017 to 31/3/2018, the time limit for filing the return for sending the goods and getting back the goods is extended up to 31/3, but it will be extended further. Why? Why? Because, say for example, you are my job worker. I am sending you materials in 10 lots. You will not return the material given in the first lot immediately after the material given. I will give you the materials, you prepare and send me. You will correlate the delivery challan. The server is not allowing to enter same delivery challan twice. I am sending you goods worth 1 lakh. You are converting 50,000 now and sending 50,000 to me. You are sending next 50,000 tomorrow. You cannot update under server. That is the problem. And they want you to match 1:1. Once if you give the delivery challan number today, you cannot enter tomorrow. So naturally, it will be extended.
Sir, suppose
Sit and ask, sir. You can sit and ask.
suppose that as per the terms between the dealer
Ah.
and the job worker not to return that scrap. Scrap will be kept by the job worker.
In the beginning itself, I told you it only prescribed. It is not suggesting. You will have to change your terms and conditions.
As per terms,
You have to change your agreements.
yeah.
After 1/7/2017, all the agreements should be in compliance with the GST provisions. So you have to, for doing the return, you will have to follow the instructions given. Put your mobile phones on to silent mode. Open messages tab. Type your name. Type your organization name. If you are a member of ICA, type yes or no. Do you practice in indirect taxes? Type yes or no. Have you filed a GST return before? Type yes or no. Would you like to have workshop on GST? Type yes or no. Would you like to receive GST updates? Type yes or no. What software you use for GST? Follow the instruction 1 only. Other instructions not for you. So returns under GST. The returns is a document where you are declaring your transaction. The corresponding effect will be given to the recipient of the goods. For example, if I file GSTR1, what is GSTR1? It is a document to upload all my outward supplies. Kindly note my presentation. I have not given any purchase or sale. I am talking about outward supply and inward supply. Why? Because your STOL sales tax and VAT are based on sale of goods act, where for concluding any transaction there should be necessary 3 ingredients should be there. One is buyer, next one is seller, third one is valid consideration and transfer of property. If all the 3 are not available in a transaction, it is not a contract of sale. But under GST you are going to assess not only sales but also service, and to some extent some deeming provisions is also there. So the concept of the Sale of Goods Act will not apply under GST. That is why we are not calling any sales as sales, we are calling it as outward supply. When I report my outward supply, for example, all these 5 people have purchased from me. When I upload my GSTR1 and give their GSTN number, corresponding invoice number, date, value, commodity, rate of tax, etc. When I update the return under GSTR1, immediately the credit will flow to them in 2A. 2A is a document or return to know available input tax credit for you. The input tax credit is a tax which is paid at the time of either purchase of goods or services or for expenses or for capital goods. Wherever I pay tax, I can claim it here. Wherever I pay GST tax, you underline the word GST tax, I can claim it here. So the GSTR1 becomes a vital document. The person who claims input tax credit generally will have to file the return every month. Of course, there is an exception. Exception is where for the small traders or small businessmen whose turnover is less than 1.5 crores can file GSTR1 once in a quarter. Others who claim the input tax credit or who pass on the input tax credit as an input service distributor will have to file monthly return, and then only the input will flow. The input can be realized only when 3B is filed. And for your information, 3B is not a return, it is a consolidated statement of output tax minus input tax is equal to the net tax to be paid or payable. Only when I make the balance tax, payment of the balance tax, I can file my 3B. When I file my 3B, all the input will flow to them. If I file GSTR1, they can view my input. If I pay the tax for the GSTR1, then only they can utilize the input. It is an interlinked story. Originally they said you will have to file your GSTR1 by 10th. Then on 11th morning you will get credit, available credit in your name. You will have to verify all the credits. You can upload wherever there is a difference. You can either accept the input given, modify the input given, increase the input given, or delete the input given. You have to do it by 15th. For example, I am billing to sir for 10 lakhs and the rate of tax is 18%. The input will be 1,80,000, right? Since 0 is not having any value, I am cutting one 0 in his input. What input he will get now? 18,000. Instead of 1,80,000, he will get 18,000. Will he accept it? He will not accept it. So he can rectify that 18,000. So if he files the 2-year return, then it will become 2. Immediately my GSTR1 will be opened to amend only this transaction. I cannot amend other transactions. Right? I can do it before 17th of that month. Assuming I am not doing it by 17th of this month, then sir should take only 18,000 and file the return. Once if he has made the claim, the server will not leave that. On 20th, notice will be generated for both. Notice will be generated for both. And what he will do, he will take the invoice copy, scan it and send it to the department. Or reply it along with the invoice copy and send it to the department. Immediately the department will take care of it. This provision was available when they introduced GST. But the general public thought it is, they are filing 3 returns every month and when can they do business like that, there were many claims. So what they did, you file GSTR1, you need not file GSTR2. That was the amendment given. Unfortunately, that amendment is against the general public because you cannot rectify the input. For example, I am not declaring his turnover. Can he get input? He cannot get input, but he would have claimed the input from my transaction. It's a very peculiar thing. And the officer will give a notice for mismatch of input, where he will be asked to pay tax, I will be asked to pay tax. Both will be asked to pay tax, government will get 2 tax. And the professional will get more cases for appeal. So this was avoided because of the representation received, and they said you file GSTR1 and you make the payment by 20th. Originally they asked to make the payment by 10th under section 3B or form 3B, GSTR 3B. Then they asked you to file the GSTR1 by 20th. The server will overrule the act. It will overrule all the provisions. Whatever it says, you have to obey. The server said, from one fine morning, from now onwards, you have to file 3B first. That's GSTR1 first, then you file 3B. 10th GSTR1, 20th 3B. You follow this procedure. The amendment was given by the server, not from the act. But we are following the server. Always we are following the server. Then quarterly return, the composition dealer and the dealer whose turnover is below 1.5 crores. Regular dealer whose turnover is below 1.5 crores can file quarterly return. The quarterly return will be like this: April, May, June return will be filed by July 18th. Kindly note down the dates here, because normal return 3B on 10th, GSTR 1 on 20th and GSTR 4 on 18th. Now they are not charging penal interest for not filing in time the GSTR 1 and GSTR 4. But the records are available with the server and it can generate notice at any point of time. If you are not filing 3B in time this month, nothing will happen this month, the return will go this month. Next month when you open the return box, it will not allow you to proceed further and ask you to pay the late fee for the previous month. Only if you pay the late fee for the previous month, current month return can be filed or some future can be filed. Then who is a compounding dealer? A compounding dealer is a small dealer where originally he was allowed to file the composition scheme for 50 lakhs. Then it was increased up to 1 crore. From 1 to 2019, it is increased to 1.5 crores. These dealers will effect purchase from local, interstate and effect sale only in local. They cannot effect interstate transaction. And the labor charges or pure labor charges are not eligible to compound their transaction. For example, I am a chartered accountant. If my turnover is less than 1.5 crores, I cannot go in for composition. I can go in for regular sales, regular return filing, but incidentally my turnover is less than 1.5 crores. I can file quarterly return of GSTR 1, but I have to file every month 3B. The composition dealer cannot claim input tax credit. He cannot collect tax. He cannot effect interstate sales. He cannot use e-commerce operator. What is e-commerce operator? A platform is provided by a person for the manufacturer to advertise his goods and buyer places the order. Swiggy, easy example. You are asking Swiggy to get masala dosa from Udupi Hotel, coffee from Hot Chips, then another thing from Krishna Prasad, Udupi Krishna Hotel, Krishna Prasad. He will get everything from wherever you ask. And those hotels cannot be going for composition, they will have to pay tax at the rate of fixed rate. Incidentally, food only 5%, so they can pay 5%. The composition cannot be availed by person who engages the e-commerce operator for his sale. Assuming I am selling this slide changer. My turnover is less than 1.5 crores. And I receive an order from Amazon. Amazon says we will market your product. And they purchase from me or they make the buyer to contact me and so I complete this. They get the buyer and seller together and I will supply to the buyer. But I will give the goods along with the bill to Amazon. Amazon will take the goods and bill to customer, deliver the goods to customer, get payment from the customer, including GST. Whatever I have charged, they will collect that money, bring it. They will deduct 1% on the total value, excluding tax, as TCS, tax collected at source, and remit it in my account. Then hand over the balance to me after reducing their commission. For their commission, they will charge GST. I will take input on their commission. And whenever the Amazon is engaged, I will have to check my TCS credit every month. I will show where it will come. In the return, I will show where your TCS and TDS credit come. So we will break for a coffee here. Its time is 3:20. You try to come by 3:30. We will complete at the earliest. Thank you. the right to compound the turnover if you violate the provisions. What are all the provisions? You are not supposed to have interstate sales, and you should not collect tax. You should not claim input tax credit. And the option should be filed before the commencement of the financial year. Very interesting. For the financial year 1920, you are expected to compound or opt for the composition by 31/3/2019. And interestingly, server is not allowing till now. It says wait for the notification. So, if any of the provisions are violated, they are not eligible for composition. Then annual return. This is the wonderful area where everybody will have to do the annual return. Under the VAT Act, annual return was there in Form WW. It will be filed only by those who have crossed 1 crore rupee. If your turnover is less than 1 crore rupee, you need not file anything. But under GST, if you have got your registration by 30th of March, for that financial year, you will have to file annual return. And many of our friends will be calling me and saying that, sir, my registration was taken from VAT period and I closed my registration by October. I have crossed only 18 lakhs. Should I file annual return for this year, 17-18? The Act does not exempt the regular taxpayer. All the taxpayers need to file annual return. Now you will ask me, sir, my client closed the business on August 15th, 2017. His total turnover is only 2 lakhs. Should he file annual return? There is no bar. And another question will come, sir, my client is having exempted turnover. Should he file annual return? Whatever may be the turnover, I want the figure. You file the figure and you say it is exempted or taxable and pay tax, whatever balance if any. If you pay any tax at the time of Form 9, there is any balance, it is drafted in such a beautiful way. Normally I will ask my clients or friends, before going into filing of return, all should go to their restroom and wash their hands properly. Why? You should use some Dettol or any other thing to clean your hands properly. Whatever you are going to file will decide your fate. You are going to damage yourself with your hand. You are going to damage your eye with your hand. If it is dirt, it will be septic. So better you wash your hands than going for GST filing return. And while filing return, please switch off your cell phone. It is the worst thing which can do. நாங்களாம் பாஸ் பண்ணதே பெரிய விஷயம். ஏன்னா அப்போலாம் இதெல்லாம் செல்ஃபோன்லாம் கிடையாது. நோ டைவர்ஷன். இப்போ செல்ஃபோன் இருந்தால் ஆஃபீஸில் இருக்கிறவங்கள்ட்டே பேச முடியல. அவங்க என்ன பண்ணுறாங்க, இதோ வரேன் சார், ஒரு நிமிஷம் சார். நம்ம கூப்பிட்டோம்னா நம்பர் கிடைக்காது. ஆனால் அவனுக்கு ஃபோன் வந்துகிட்டே இருக்கும். The cell phone is a disease which is killing everybody. While filing the return, you should have utmost concentration. You will do 5% error, server will take 10% error. For example, now I will ask an interesting question. There are 3 basic records which must be maintained by a dealer under GST Act. What are all the basic records? You will have to answer something because I have been talking for the last 1 hour and 40 minutes. Somebody should speak something. You can give any one record. I will say whether correct or not.
Sales register.
Sales register, not correct.
Supply register.
Supply register, not correct. Then? Huh? Purchase. Actually, I have to give 50% for purchase and output register. But not 100% because the first record should be maintained by a registered dealer is GST certificate. It should be displayed in your office or your place of business. Then the GSTN number should be specifically mentioned in your name board or in any other place. If it is not done, the penalty is just 25,000. Under GST, you take the 25. Edhukal 25,000 now. And in your bill, if you are not mentioning your GSTN number, 25,000. If officer catches, he can levy 25,000. And if you are a composition dealer, not mentioning that you are a composition dealer in your name board and in your letterhead and in your invoice, you will be levied 25,000. But most of our composition dealers are not raising invoice, so they are safe. Huh? No. Whatever thing, bill of supply or invoice, both they are not raising, no? They are giving you only figure. Whatever they are affordable to pay, they give a figure. So, and interestingly, for annual return, you have to maintain books. You have to file income tax return. Then only it will match. If I say this to all my clients, I will lose some 10 clients or 10% of the clients. They will say, Nalla adikra paakra sir. Why? Because they are not afraid of GST. Whatever they file in income tax is different figure. Whatever they file here is different figure. But if you file annual return, the officer will pick everything. He can view your income tax return and match it with your GST return. It is up to us to reconcile that. If time permits, all of you kindly learn how to prepare annual return. If there are any classes, Mr. Lakshmanan will inform you. If any meeting is there, you can get in touch with him. 9 preparation, more than preparation, you have to have all working papers. The working papers will speak for you. Okay? Then coming back to the final return. Compounding dealer, earlier compounding dealer will not file annual return. Now the regular dealer will file form 9, composition dealer will file 9A. And if your turnover crosses 2 crores of rupees, your 9 should be attested by a chartered accountant or by a cost accountant in form number 9C. Your 9 is a reconciliation of your books with returns filed. 9C is reconciliation of your returns with all financials. So the auditor will have no other scope to levy the suppression and pay tax. And ask you to pay tax. He cannot avoid penalty. And more interestingly, there is a column under form 9. The assessee should prepare the form 9 and say if there is any difference, interest, penalty, etc. You will have to say separately and pay. I am not a quasi-judicial authority to levy penalty or penal interest, right? Only quasi-judicial authority can levy those things. But under GST, the assessee himself pays that. So under GST, the assessee is passing his assessment order. It is not passed by the assessing authority. Very interesting point. And tomorrow I am addressing in one forum for the annual return. Final return. It is a return should be filed by a dealer who has closed his business or when his registration is cancelled by the government. He will have to file within 90 days of cancellation. A return called final return. It is a gap between the regular sales and the final sales. I may be having a stock and after the closure I may make a distress sale of the available stock. I may get some money. I have to pay tax for that money. Final return is one more opportunity for you to close the registration. And there is a beautiful amendment from 1/2/2019. It says as soon as you apply for cancellation, the officer will not cancel your registration. He will suspend the registration. When he suspends the registration, it will be prolonged till the process is completed. After that, he will cancel the registration. In the meantime, you will be allowed to file the annual return and GSTR 10, which is a final return. So it should be filed within 90 days from the date of closure or 90 days from the date of cancellation of registration by the government on suo motu. The notification, we are going to deal sections chapter 37 to 48, rules 59 to 84, forms 3B, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Then notifications, I could give only sample because notification is too many, and if I give this, the notification will run for 10 pages. So I have given some sample to you. So summary of return where your input and output are matched and the balance to be paid is identified in 3B. Your outward supplies is reported in 1A, your inward supplies where you are claiming input will be declared in 2A. Very interestingly, we will file the GSTR1. When I file GSTR1, say for example, Deepika, our Surender and Lakshmanan. Assuming Surender is a regular dealer. When I file GSTR1, his 2A will be automatically auto-populated with the input tax credit. And assuming our friend Deepika Ganesan is a composition dealer. Composition dealer will file GSTR 4. The input for the composition dealer will be reflected in 4A. So when I upload my GSTR1, the composition dealer's 4A will open and auto-populate. Then Mr. Lakshman is input service distributor. He is, for example, he is a head office in Tamil Nadu where he will get input on common expenses. Common expenses like audit fees, various other telephone bills or internet charges, etc. He can distribute the input to the respective branches in other states. For that, he will register himself as Input Service Distributor called as ISD. His form number 6A will be automatically updated with my details. You will ask me a question. Sir, Ms. Deepika madam is only a composition dealer. For what the purchases are reflected in her return? Because she is subjected to a ceiling. She cannot effect outward supply beyond 1.5 crores. Assuming her purchases is 4.5 crores. Is she eligible to go in for composition? She is not eligible. Officer will give notice. Then she will have to go for appeal. To check this only, the composition dealer will be getting the input available and purchases made, output services received in their return. Many of us are not seeing 4A. Why? Because the 4 says you need not upload the purchase details. That for columns are provided to upload the purchase details and other input details. But there is a notification which says composition dealer need not file the details of input. However, you are not eligible to claim input. But the 4A is automatically updated with whatever purchases you have effected. So you are caught in the vicious circle. Then comes the regular dealer will have to file GSTR 3. What is GSTR 3? You file GSTR 1, then you verify 2A for your input, then you make the payment and upload the return. That is called as GSTR 3. Now the order is changed. You file GSTR 1 on 10th. You file GSTR 3B on 20th. You are not filing 3. 3 is out of syllabus. 4 is for the composition dealer. 5 for the non-resident taxable person. Who is a non-resident taxable person? In our first example, we took Hyundai. There may be a sister concern where they would have requested some Korean counterpart to come here and verify the manufacturing process for 6 months and give his report. He will be sitting here, he is not a registered dealer. Whatever money paid to him is liable for GST. Liable for GST. And in this case, the recipient will have to file GST return for him in form number 5, GSTR 5, and pay tax correspondingly. Then comes IDR provider. Who is IDR provider? Normally it is a fashion. Everywhere it is a fashion not to purchase books. They will say, hey, we are download from the server here. I read from the server. Especially if you ask people in Australia, they will say, sir, நீங்க விகடன் கல்கிலாம் படிச்சிட்டீங்களா? விகடன் is a Tamil magazine and Kalki is also a Tamil magazine. Vigadan will come on Wednesday, Kalki will come on Saturday. But in the server it will come one day before. They used to read one day before and say proudly, I have read all the books. After seeing this, Australian government thought there is a wonderful scope to assess the downloaders. So they brought in one provision to assess the person who gets money for providing some data downloaded and used in the respective country. The origin of this provision was from Australia and we are following Bharatiyar. What he said? சென்றடிவர் எட்டு திக்கும் கலை செல்வங்கள் யாவும் குழந்தை இங்கு சேர்ப்பேர்னர். எங்கே போனாலும் எங்கெங்கே டேக்ஸ் இருக்கோ எழுதி கொண்டு வந்துடும், நான் மொத்தத்தை கட்டிடுறேன். ஸோ அந்த ஃபிலாசபியில் they have brought that OIDR to India and the form is form number 5A. Input service distributor 66A, tax deductor. And for your kind information, GST is a collection of various acts. Some portion from VAT, some portion from service tax, some portion from excise duty, some portion from customs duty. Normally, if I give some scissors to you and ask you to cut, you will cut what is required first. Then you will cut what is not required. Like that, they have cut and paste transfer pricing from income tax, TDS and TCS from income tax to GST. Again, tax. Transfer pricing is called as related party transaction under GST. TDS is called as TDS under GST. TCS is called as TCS under GST. And TDS is levied when you transact with a government organization or an industry enacted because of some act, or it may be a central government or state government. So for all these things, they will levy TDS if your gross receipts exceeds 2.5 lakhs or if your purchase order is more than 2.5 lakhs. The TDS, what they deduct, they will have to remit by 10th, so that you can adjust the TDS on 20th. It is much faster than your acclaimed 26 days. What is 26 days? TDS, effect in Income Tax Act. மார்ச் மாதம் ஒருத்தர் கட்டினான்னு வச்சுக்கோங்க. இப்போ நாங்களாம் பேங்க் கடைக்கு போகிறோம், எங்களுக்கு வந்து ஏப்ரலில் பில் போட்டுறோம், போன ஏப்ரல் மேல பணம் கொடுத்துட்டாங்க, மேல டிடிஎஸ் முடிச்சுட்டாங்க. அந்த டிடிஎஸ் நான் எப்போ அவைல் பண்ணுவேன்? அடுத்த செப்டம்பரில் when I file my tax audit report. So 1.5 years government misused my money without interest. But fortunately or unfortunately, the indirect tax person does not know all these things. He gives credit in 10 days. Much faster than your 26 days. 26 days credit வரதுக்கே 3 மாசம் ஆகும். The 10 days credit வந்தது அந்த மாசமே எடுத்துக்கிறோம். So it is very good act, no? You are not missing anything. Whatever paid for you, you are taking. And there is a provision to rectify the return also. If the number is wrongly mentioned by the other party, he can rectify. And if you are getting some TDS which is not relevant to you, you can surrender or you can cancel. You have to accept which is relatable to you or relevant to you. Okay? The input service distributor 6A, tax deductor 7, tax collector 8, annual return 9A, 9B yet to be given, 9C is the certificate by chartered accountant or by cost accountant. Then final return 10, inward supplies of UIN person. Very interesting. Under the STL CST Act, there was a provision. If you supply to any embassy, you will have to get one form called Form J. If you get Form J, there is no tax for the transaction. Even it is within Tamil Nadu, you will have to get Form J. Otherwise, this transaction is liable for taxation. And in the professional side, we got many appeals for not filing Form J, because the other party will not give Form J. They say we are exempted from tax, but they are exempted provided they give Form J. To avoid this anomaly, what they have now amended is all the embassy and notified institutions, international institutions, to get themselves registered under the GST Act, and they will have to file the details of all their expenses by 28th of the next month. They will not give income details. That means the US consulate who is sitting next to us may be my client. I will have to file return for him. But he will not allow me to go to America. He may give some fees, and I can proudly say this ambassador is my client. And he will have to file every month return. So we are not leaving even the notified people. The dates will change, so you will skip that. It is always changing, no? But all these are not changing. TDS 10th of every month, TCS 10th of every month, and ISD 13th now transferred to 10th. Annual return 31st December of succeeding financial year, final return within 30 months from the cancellation, UAN before 28th. Those dates are not changed. I will go to next slide because it is already 80. I am now to complete. Whenever I upload something in my GSTR1, the effect will be given to the regular dealer in 2A, whether he can see the input tax credit available. Similarly, the 4A will be composition dealer able to see the available purchase or input. Then 6A for the input service distributor. The input service distributor can then distribute the available input to their branches. It is auto-populated, I need not fill. And the 2A is a form which have 3 boxes. The first box, part A, will have auto-populated entries of regular transaction. Regular transaction may be based upon the business or profession, as the case may be. If I am a dealer, my purchases will be reflected there. If I am a chartered account professional, wherever I engage another chartered accountant and get the bill from another chartered accountant, that will come in part A. Part B will be the box with the TDS and TCS, ISD credit, auto-populated ISD credit. Part B will be ISD credit, where the head office distributes the available credit to me. It will be available in part B. Part C is TDS or TCS credit, which I have been given in the return. Very interestingly, for example, if I deduct TDS on any one of you and file the return by 10th, you will have to open your server and your web page by login to with your user ID and password. To the right hand side of your server, the screen, there will be columns for TDS and TCS. You will have to click that. Then you will enter the TDS and TCS columns. There, the first box will give the details of transactions received during the said month. Transactions received during the said month. Then I will have to open that. When I open the transaction, there will be some 10 transactions, and I will have to check whether all the 10 transactions relates to me or not. If it relates to me, I will have to tick the entry, then put accept. If I accept like that, the credit available in my TDS or TCS will go to my credit ledger, where I can adjust it for the same month output tax. So whenever you are logging into the server, you will have to check whether you have received any TDS for this month, or when you are going to file the return, you check whether you have received any TDS or TCS credit that month. Then accept it. When you accept it, it will be available in your credit ledger. When you make the payment, you can reduce that and pay the difference. So it is very interesting. All the provisions are interlinked. When Form 1A is filed, uploaded, the input of GSTR 2A will be available in the recipient's record. He will have to view that, and the recipient can modify that. It was the provision which is originally made. Then if there is any difference, he will open the GSTR 1 of the outward supplier. Only for the particular transaction, you will have to upload GSTR 1 by rectifying the defect already made. If this was allowed to continue, every returns filed is that month assessment. You will not have any doubt. You will not have any clarification. You don't need a person to advise you. Normally we don't take everything when it comes easy. We will always like to have tougher things like CA course. So they have avoided filing 2A. That paved the way for mismatch. Mismatch will be very dangerous after filing annual return. Many of us will receive notice. And interestingly, they have said for this year you need not correlate the 2A with your books. But if you open 2A, you will get input from everywhere. For example, you would have borrowed some funds for the company in furtherance of business. They would have charged you the initial charges, processing fee, etc. For the processing fee, GST is there, and they would have remitted the GST in your account. You will know the details only if you download 2A. During 17-18, we were not allowed to download 2A. So many of us have not claimed the bank charges credit, and you would have purchased a DD. You would have paid bank charges. Whatever you pay as a bank charges will have one portion for GST, and that GST will come to you, and you are supposed to reconcile that. If you are not reconciling that, you can kindly come out of GST. If you are not claiming some input, it means it is not related to you, right? If it is not related to you, can you claim in the income tax return, which is not related to you in the income tax return? You cannot claim. That is why normally I used to say GST is not indirect tax, it is indirectly direct tax. It will affect you directly. Many of us does not understand the 2A. 2A is a very dangerous weapon. You may claim some input. The other party would not have reported that. There also you are caught. Other party out of lower defection has reported in excess. There also you are caught. And interestingly, the GSTN number is having so many digits. There is every possibility of making error. Every possibility. Because you cannot identify 1 and I. Huh? O and 0, yes. You cannot identify that. So you may give a wrong number. The input may not flow. That is why I said the important 3 documents is, one is certificate, 2 is the details of your supplier. 3 is the details of your customer. The point of supply says, if you have the details of the buyer or recipient of the goods, then your sale will be decided as intrastate or interstate sale based on the details available in your record. Now, you can say, actually this should not be asked in the first class, this should be asked in the last class, because point of supply and other things would not have been completed to you. I am coming in the second session, I think, for your course. So that is the reason, because I am not available for the next 2 days. So they have asked me to come today. Due dates for filing returns. Late fee of rupees 20 and for nil return 50 for other return will have to be paid on 3B alone. Now I will give you one important clue. When you are going to file the return, first you know whether it is a taxable return or nil return. If it is a nil return, you mark it as a nil return. Even if you file belatedly, the late fee will be 20 rupees only. You can save 30 rupees. If you are not ticking that box and proceed filing the return, automatically the server will ask you to pay 50 rupees. You cannot go for any appeal. You cannot file further returns if you are not paying that. And one of my clients who used to file regularly returns, one nil return he filed 1 month late. And I asked him to pay for 30 days 20 rupees late fee. He shouted at me, "No sir, the nil return pay tax கேட்குறேன்." நான் என்னப்பா கேட்குறேன், அது ஃபிகர் வருது பாரு, நீ உன்னோட புக்லேயே எடுத்து பாரு, இது சர்வரில் இருக்கு பாரு. The pathetic thing is, the nil return dealer will have to pay these things. So don't ever postpone filing returns. You file the returns every now and then. Assuming the next month your Good Friday is coming on 19th, I think. If it is on 19th, if you are a Christian, you file the return, then go for Good Friday. Because if you file on 20th, 21st, 20th normally you cannot file the return because server will be always in traffic. 21st if you file, the late fee and penal interest will automatically come. The other person will take you for ride. If you are not paying in time, he will not get input in time. So better you stick on to the provisions of the Act, and the annual return is to be filed by 30th of June. My sincere view is you file the return by at least 10th of June. Beyond that, you may not be in a position to file the return. Probably server may burn. Because everybody will be filing annual return and also monthly return. You see the traffic, you imagine the traffic. So it will be very interesting how you are going to do. Returns menu, we are going into GSTR 1. You select the financial year, then return for the period in which you are going to file. You can use the search column. Then details of outward supplies of goods or services. Table A from GSTR 1. Auto drafted details in GSTR 2A, monthly return. The next slide will give you the GSTR 1. The first column will have the details of all your invoices. Invoices is when you are effecting a transaction where you are effecting a transaction to a registered dealer. The registered dealer will be claiming input on your sales. You will have to mention in the first column. These transactions are called as B2B, businessman to businessman. Only when you incorporate the GSTN number and other details of the recipient, he will get input. If you are missing any one link field, you cannot upload the return because server will not accept the return with error. You will have to properly fill in the GSTN number and details of the bill, etc. Then it will take up. Then comes B2B B2C large invoices for interstate transaction. If I effect a transaction for 5 lakhs to an unregistered dealer in other state, single invoice, unregistered dealer in other state. For example, I am a dealer in cell phone. I am selling cell phone for 5 lakhs to a dealer in Pondicherry or a person in Pondicherry. I will have to report that separately here in column number 2. Why this anomaly or why this method is followed? Because you have to understand GST is a consumption oriented tax. The tax will pass on to the state which uses your transaction. And if you are effecting a sale to an unregistered dealer in different state, your tax will entirely flow to that state. There is no benefit to Tamil Nadu government, right? Therefore, you will have to mention this separately. And moreover, if a person is getting more transactions like this, officer can go and catch him and make him a registered dealer. The entire transaction is based on your PAN number and the details of your GST. So, all the dealers, if they think that they are escaping now, will be caught, and the anti-profiting is a provision available where if a person collects tax and not remit it to the government, he will be penalized. And the anti-profiting is not used till now. Why? Because the indirect tax is like a bad habit. It will slowly come into the person. Then taking out is very difficult. So once if you file the annual return, your entire transaction for that period is mapped. Then the anti-profiting will evolve. Officers will not keep quiet. They will match your figures, whatever available, with your income tax and your GST. There is any variation, they will come to you. And for that you need to prepare many reconciliation statements. For example, under GST, if I transfer goods to my own branch in Bangalore, I have to pay tax for that. It is called a stock transfer. But in regular financial accounts, this will not find place. And the RCM turnover will find place in 3B. RCM is reverse charge mechanism. When I deal with an unregistered dealer, I will pay tax, or when I make payment to an advocate, I will pay tax. Next month I will take an input. But this will not be available in my income tax record. I have to reconcile that. So the reconciliation plays a vital role. And the turnover under GST is on receipt basis or deemed receipt basis. Whereas there it is actual basis. So there will be difference, we will have to reconcile. And normally in all direct indirect tax returns, you are expected to upload your purchases and sales. But peculiarly under GST, they are asking you to upload credit note and debit note. Normally, what is credit note? Credit note is given to reduce the amount to be paid. What is debit note? Debit note is a note given to increase the amount to be paid. It is not related to purchase return and sales return. Kindly note. Normally, everybody thinks that when I effect a sales return, I will give credit note. When my client receives the goods, when my client returns the goods, he will raise debit note on me. Everybody was under the impression that it should match in the last column, 9B. That is not the case. It is, for example, I have done one work to institute. I have done the work for 1 lakh. I have generated invoice. 18% I have charged. Then after completion of the work and after scrutinizing the work, I came to know that it should be 1.5 lakhs. For that 50,000, I can generate debit note on the institute or a separate supplementary invoice. Debit note will have the same column as invoice. It will have the recipient and outward supply details, their GSTN number, their address and other things, and also the details of the goods or service transacted, then the total value, then tax effect, everything will be there. If I raise a debit note on institute, the institute will get credit on the input available on the debit note. It is very more interesting, no? The institute is getting input on 1 lakh which I have raised earlier. Now I am raising 50,000 as debit note. Even for 50,000, they will get 18% as input tax credit. It will be auto-populated in their 2A return. So, it should be understood in a clear way. Normally, if you see your assessee's books, the balancing figure will be credit note. And if you ask your client, he will say, sir, you have raised one credit note in March. Yes, sir, I have raised one credit note in March. What is the number for the credit note? He will say 1. Then he will give the details to whom he has raised. If you see the books on February, he would have raised another credit note. If you ask him, he will say, this is also 1, sir. And he will say, this is for the February. That is for the March. Then if you go into February accounts, you will see for another person also he has raised one credit note for 1 with the number 1. If you ask him, he will say, no sir, this one is for the particular individual for the current year. That one is for February for the current year. And next one is March for the current year. You cannot do your credit note on later date. You will have to do the credit note and debit note month on month. If you had the opportunity of filing excise return, there the last column will say the invoices raised during the period, cancelled during the period, utilized during the period, you have to give. Similarly for the way bill or gate pass, whatever name they call, you have to give the details. The same scenario is reflected in GSTR 1. You will have to report all the documents which you have utilized, including your delivery challan for the job work, e-way bill, etc. You will have to give in your return. Of course, for e-way bill, it will auto-populate in your GSTR 1. You need not generate that. And what is the e-way bill? It is a delivery challan generated in the server for moving the goods from one place to another. After receiving the goods, the recipient will have to accept the delivery challan or e-way bill. If he is not accepting, then it is deemed as he has accepted the goods. What is the necessity of accepting the e-way bill? For example, I am receiving one consignment for 10 lakhs from Mr. X, who is in Bangalore. I am not accepting the e-way bill. So it is deemed as I have received 10 lakhs worth of goods. But in the meantime, I have returned back 1 lakh worth of goods to Mr. X, stating that they are all damaged. And he is raising a credit note on me. Officer will not accept. Or for your example, out of 10 lakhs, I have received only 9 lakhs worth of goods. I have not received 1 lakh worth of goods, but I have kept quiet. Then it means I should have received all the 10 lakhs. I cannot question the balance 1 lakh. So the credit note is a vital document everybody should see. This is for registered dealer, the credit note and debit note. Why the credit note and debit note for registered dealer is dealt separately is nothing but to enable the registered dealer to get the input. Invoice தனியா இருக்கிற மாதிரி credit தனியா இருந்தா தான் அவருக்கு input வரும். So அதனால it is placed separately. Whereas here 9B, the credit note and debit note are made, it is a consolidated entry. It is not an individual entry. Total value alone will be there. Because you are not passing on the input to the end user. He is not a registered dealer, na? Then 6A deals with export invoice. Export invoice, very interesting. Export invoice, I want to ask one question, whether export is taxable or not. Taxable idea? Huh?
Letter of undertaking.
If letter of undertaking is not given, it is taxable. It is taxable. I will have to generate an invoice, commercial invoice, wherein I will have to charge tax, but the other party will not pay. I will pay the tax. I will upload the details in my GSTR 1. It should match with the details in ICE gate of customs, where my export will be declared. If there is a one-to-one match correlation is possible, then whatever tax I have paid now will be refunded to me by the customs department. Note, it will not be given by the GST department. They will be giving once in a quarter or so, they will return back the money if everything is matching. Everything includes port number. The port number may change. For example, in Chennai, we all think there is only one harbour. There is also another harbour in North Madras, where the goods come and that is for private ships, it will come and land there. So the assessing authority or in the export document, the second harbour number will be quoted correctly. Whereas in our GST, we will quote the first harbour number. There is a mismatch of harbour, you will not get the refund. So the verbatim ICE gate entry should be available in your GST website. Then only you will be allowed to take the credit. Then there is a document called letter of undertaking. It should be filed every year by the assessee with 2 witnesses. It should be uploaded. If the letter of undertaking is uploaded for every financial year, you need not pay tax on the export of service or export of goods. Whereas, whatever taxes you have paid on your purchases or on input stage can be asked as refund. Whatever you have paid on the purchase of the goods which are exported to foreign country or services which you received for the export of the services, you can claim refund of the input tax available with the GST department, not with the customs department. For claiming refund with GST department, you will have to file one return called RFT 1A. You will have to upload that return. Then only GST department after verification will give you your input. How will they verify? Whatever input you are showing should match the counterpart entry. Should be available in your 2A. Then they will give refund. At times they may ask you to produce the invoices or connected documents. It may be invoices or any other connected document. You have to produce the document, then ask for the refund. And this refund is subject to rejection also. If it is rejected by the officer, then it becomes your expense, right? You have to reconcile that in annual return. The input can be claimed provided it is for the furtherance of business incurred. For example, if I take my staff to hotel for a dinner, then I claim input on the food bill. I cannot claim input tax credit on that, because food is per se is not allowed to take, and the second one is it is not in furtherance of business. I may give it as a goodwill gesture to my client, my staff, but there is no scope for goodwill in GST. So better I can pay it from my pocket rather than paying from the company, right? Whatever you pay, it should be in furtherance of business. For example, you all have come for the class. You would have paid some money. You can claim input on this money if you have given your GST number here. Because whatever money you pay inclusive of GST, you can claim GST, provided you will get the tax invoice from the institute. So because it is in furtherance of business you are learning, therefore you are eligible to take credit on the expense. All expenses, all purchases, all inputs you can claim ITC provided it is in relation to the business or in furtherance of your business. Then B2C invoices will give the total invoices. total value of invoices. You need not give invoice wise details in B2C, because the end user is not going to claim. For example, I am auditor for Co-optex. They are effecting sale in their showroom. The goods are purchased by general public. They purchase dhoti, sari, etc. They are not going to claim input tax credit on their purchase. So I will give consolidated figure as output here and pay tax. Then nil rated supplies. What is nil rated supply? It may be taxable but exempted by notification or exempted goods. Whatever may be there, you need not pay tax on that, on the sale of that particular product, and you will have to report that. Mind you, if your raw material is taxable and the finished product is exempted, you are not allowed to encash the input. You understand this concept very clearly. Your purchase and sale are to be taxable transaction to claim an input. If purchase is taxable and sale is not taxable, you are supposed to reverse the input tax credit. If you are not reversing it and carrying it, it is an offence. It is an offence under GST Act. Officer can come and see your place. If they come and see, they will not see this only. They will see everything, no? So better, wherever not eligible, kindly surrender it. Don't take chance with the department. Because now the sky is the limit. From 2017-18 onwards, if your books are taken up for scrutiny under Income Tax Act, you can imagine the officer asking you to tally the input. Income tax officer normally will ask for VAT assessment order. Now he will not ask for VAT assessment order. You match it with your 2A. It is more than sufficient. And you cannot match it with your 2A. Because whatever you have claimed may not be available there. Whatever available there, you might not have claimed it. So it will be very interesting. We will verify and do. Then comes tax.
What if there is a rate difference, that is input?
Ah.
Input credit is probably about 10% and your output you're paying at 5%. So
The differential rate you can ask for refund. That is available. Then very interestingly, the advances received are to be reported. Normally you are not reporting any advances in any indirect tax. Only under GST you are going to report the advances received. If you have received advance for goods or service from 1/7/2017 to 12/10/2017, you will have to pay tax on the advance received. From 12/10/2017 onwards, you need not pay tax on advance on goods. However, you might not have completed the work. Bill may not be raised by you. In that case, in annual return, you will have to mention taxes paid, but bills not raised. You will have to report there as an advances not covered by bills. Very interestingly, you will have to reconcile that. But many jewelers, what they are doing, when they receive the installment, they have cheat scheme. When they receive installment, they treat it as an advance payment and pay tax on the advances. In the last installment, when they take the delivery of the goods, the earlier advances are adjusted. And wherever there is some excess there, it will be collected from the party and paid to the government. So this is the normal scenario. Then comes adjustment of advances. The advances can be adjusted when I raised invoice. I have received advance on 1/7/2017. I have completed the work on 11/9/2017 and raised invoice on 12/9/2017. Such being the case, I would have adjusted the advance paid to the bill, and wherever there is a balance, I would have collected the balance from the party and remitted to the government if there is any balance tax. And there may be another instance where I am refunding the advances to the customer because the order is not materialized. The party wants to cancel the order. I may refund it. So for receiving the advance, I am expected to raise a document called advance receipt voucher. For adjustment of advances to sales, I have to generate a voucher called advance adjustment voucher. For refunding the money to the party when the order is not materialized, I have to issue an receipt called advance refund voucher. And in the advance refund voucher, I have to get the signature of the party, so that the advance water tax paid by me will be adjusted in my future demands. Then comes HSN-wise summary of outward supplies. The Act says up to 1.5 crores you need not give the HSN code. From 1.5 to 5 crores I need to give only first 2 digits of the HSN code. From 5 crores onwards I have to give first 4 digits of HSN code. In many of your invoices you will not see HSN code. Many of your purchase invoices you will not see HSN code. And you have to first understand what is HSN code. HSN code is a code given for a particular commodity with various alternatives. Probably you might have taken coffee here. Assuming coffee's code number is 99. Coffee with sugar, more sugar is called as 9901. Coffee with medium sugar is called as 9902. Coffee without sugar is 9903. Coffee without sugar, strong coffee is 9904. Coffee with sugar, strong coffee is 9905. Likewise it will go. So for every commodity there will be 9999 entries. But interestingly, some entries may be in 5%, some may be in 12%, some may be in 18% and some may be in 28%. So you have to give correct HSN code. And as far as purchase is concerned, you are not mentioning any HSN code here. In 3B also you are going to give only total input available and adjust input available with output and pay the difference tax. But your form 9 asks you to give HSN summary for your input separately and output separately. How can it match? It will not match. Many of us will fail in this. Because if your product is an industrial product, you can identify. It is a commercial product, you cannot identify. It may change the number, or you may give a wrong number, or the other party would have reported a wrong number. The 2A will auto-populate the input available and also the HSN summary of the purchases. It should match with your output summary. If it is not matching, the officer can say mismatch in HSN summary. That is also possible. He will not take it now, he will take it after 5 years for the first year. After 5 years, if you ask something, you will say, I don't know, sir. Then he will ask you to pay immediately. If they come for inspection, what they will do? Sir, you have not made a proper assessment of all these things. You pay tax for this. So my sincere suggestion is, when an input is eligible or not, when you have the invoice, you claim the input. When it is ineligible, you reverse it immediately the same month and have a note for them. That note will help you when they come for enforcement inspection and say, I have already reversed the input, you need not question now. Otherwise, your input in 2A will not match with the input in 3B. The officer can raise question after 5 years. இப்போ கேட்டாலே நமக்கு மறந்து போயிடும். இப்போ ஜூன் மாதத்து ரிட்டர்ன் இப்போ கேட்டால் நமக்கு தெரியாது. ஏன் பிப்ரவரி கேட்டால் தெரியாது. So better we will have to give. Then comes very interesting, documents used. Document used. You will have to give B2B invoices. Deemed export, SEZ supply with payment, SEZ supply without payment. What is SEZ supply? It is zero rated sales. If you have given LUT, it is without payment. If you are not giving LUT, it is with payment. Similarly for export, deemed export. Then receiver's GST and UAN number, receiver's name, invoice number, date, point of supply. What is point of supply? Where you are delivering the goods. For example, if an unregistered dealer from Pondicherry purchasing from my shop, one from the sales counter, normally what I will do, I will take it as a B2C and charge it SGST, CGST. If I deliver the goods to Pondicherry, he is making an order here, I am delivering the goods to Pondicherry, I will have to make an invoice of IGST. So point of supply will decide. And in all your invoice, you will have to mention point of supply, time of supply. Time of supply, I don't think it is possible for all the business, but point of supply you must mention. Total invoice value, supply type, and if it is reverse charge mechanism, you will have to tick this column. What is reverse charge mechanism? Where you are claiming input and the input is resultant of the tax paid by you on behalf of others. Right? From 1/1/2007, the tax paid is not an expense, it is a current asset. 1/1/2007 is a period when Tamil Nadu VAT was introduced. From then on, the concept of accounting changed. The tax paid becomes your prepaid asset and you are going to adjust that with your output tax. Similarly, when you claim tax on reverse charge mechanism, the Act says you will have to generate invoice for that. That means purchase invoice you will have to generate. That is not new to Tamil Nadu because under Tamil Nadu General Sales Tax Act, there was a provision called bought note purchases. Where you are purchasing from unregistered dealers, you will be recording the purchases as if the invoice is issued by the third party. To address will be your firm address, from address will be blank. You fill that and fill the amount. So that your purchases are accounted. If you account like that, you are eligible to claim the input tax credit on reverse charge mechanism. Even for expenses, you are expected to raise an invoice. Otherwise, you are not eligible to claim input tax credit. Because it is a current asset, for taking credit on current asset, you should have a documentary evidence. Documentary evidence in the form of self-generated invoice, right? Then you will have to save the particular invoice, then go to the first stage, record the next invoice, like that you will have to proceed further. Then comes B2C large invoices. It is an invoices raised for unregistered dealers in other state, over and above 2.5 lakhs. You will have to mention point of supply, invoice number, invoice date, supply type, total invoice value, taxable value, integrated tax, then cess. There is no CGST, SGST. You have to kindly note there is no CGST and SGST. It is only for interstate, between two different states, transactions with unregistered dealers. Then comes your credit notes and debit notes received from registered person. Actually I have taken the screenshot of your return and posting the screenshot. I am explaining the screenshot of the return. So kindly have more concentration, then only you can ask some question if you want. Credit note or debit note, you have to select that, uploaded by taxpayer, so you will get the details, whatever the debit note or credit note you have generated, then save it. The credit note is for reduction in price, maybe sales return, maybe discount, etc., etc. Then for that you will have to generate credit note. Debit note is for increase in value or cost of the product. Here you will have to tick one column pre-GST regime. Thank you. The pre-GST regime will say the transactions effected prior to 1/7/2017. அப்புறம் என்ன அர்த்தம்? அப்போ வந்து கிரெடிட் கூட இப்போ காமிக்கணும். 17-18 எவ்வளோ பேர் காமிச்சிருக்கோம்? நானே காமிக்கல. 17-18 you had VAT period for first 3 months, right? If you have raised any credit note for that period, you should report it in the GST return. Because it will have effect in your trading profit and loss account. That will be matched here. If you are generating credit note after the introduction of GST, you are supposed to mention here reasons for issuing. If you download this, that is, if you click here, the reasons will be given. Cancellation of order, rejection of the claim, etc. will be there. You will have to select and enter that correct person, correct entry. Then credit notes, debit notes received from unregistered persons. So this is a wonderful area where you are going to give only consolidated value. For unregistered dealer or B2C, you are not worried about the particular invoice or credit note number. You take consolidated total amount, give the total entry. So we are safe. Export invoices. The export invoices will have, very interestingly, the invoice number, date, port code. Here it should match with your ICE gate of customs. Shipping bill number, shipping bill export, shipping bill date, etc. Total invoice value, supply type, GST payment with payment of tax or without payment of tax, then taxable value you will have to mention. Sometimes there may be some error in the shipping bill number, date or bill of export number. Those things you can amend in the subsequent months. You can amend the return in subsequent month by amending the number alone. Similarly, I have effected sale to a registered dealer, but I have reported that under the sales effected to unregistered dealer, B2C. Now I can amend the transaction in the return. I have to go to the amendment for the B2B transaction. I post that there, then reduce the amendment transaction B2C so that it will match. Okay, and the input will go to the registered person even if I amend later. How you know that? You have to check with your 2A. When you are not getting the input, you have to ask them to amend the return. Normally they would have filed the return and they would have taken it as B2C. So we have to correct it. Then taxable value, amount of integrated tax, whatever there you have to mention. For export there is no SGST, CGST. It is only integrated tax. Why this amendment is made in the system is, earlier for SEZ in Tamil Nadu, for example SEZ in Tambram, to effect a sale, many of us have charged SEZ, that is CGST and SGST. They have not charged IGST. But you are supposed to charge the SEZ only with IGST, integrated tax. You are not supposed to charge under local tax. So now they have modified the return accordingly. Then invoices to end users. Here you are giving the total value, supply type, rate of tax, etc. Nil rated supplies, where intra-state supplies to registered person, intra-state supplies to unregistered person, intra-state supplies to registered person, interstate supply to registered person, interstate supplies to unregistered person. Why these details are taken by the government? Because they want to tally the macro level. Whatever record they have, they want to tally the turnover in server. So they are asking you to give. Wherever you are making a local, that is a local sales to not registered person, the money is consumed here. So they want that money first. When you affect sales to an unregistered dealer in other state, it will flow into other state. So they want to segregate that. When you effect a sale to a registered dealer in other state also, the tax will flow to that state. So to know the exact amount of money which they can retain, they are asking you to give these details. Then tax liability on advances received after adjustment. Adjustment of advances, HSN wise outward supplies. Then documents, you have to verify the documents. First one is invoices of outward supply, invoices for inward supply from unregistered person. That means your RCM invoice. Invoice from unregistered person means it is your RCM invoice. You will have to, you are expected to generate that. Then comes revised invoice. What is revised invoice? Under GST you are not allowed to revise the return. Can you revise the invoice? For example, I have applied for registration on 1/1/2019. I got the number on 1/2/2019. Between 1/1/2019 and 31/1/2019, I have effected sales. I have collected tax. But the persons who have paid money will not get input tax credit on that transaction because I am not a registered dealer. I have applied for registration. Similarly, I will not get input on my purchases. The Act permits me to give revised invoice within 30 days from the date of sanction of my registration to all the earlier transactions. It is a one-time affair, I cannot use it every month. Revised invoice should be raised only once, that too within 30 days from the getting of registration. I can amend the old month record, but I have to give reference of the old month so that there cannot be duplication of the entry. Right? I can raise a revised invoice and report. Then comes the debit note. Debit note, I need not explain, I have explained enough. Credit note. Then comes receipt voucher, advance receipt voucher and other receipt voucher. Then payment voucher, when I refund the advances, I have to give that. Refund voucher also there. Then delivery challan for job work. If I give for job work within the state less than 1 lakh, I will not generate e-way bill. Whereas I will generate delivery challan. For delivery challan, I will have to give the number of challans used for the particular month for giving the job work and the details thereon. Then delivery challan for supply on approval. What is supply on approval? Huh? Not sample, it is sale or return basis. If you will have to rewind your final days, we have accounted for sale or return basis in our income tax paper or in accounts paper, where the goods will be supplied and it will be subject to acceptance of the other party. He may take 6 months to accept the transaction. So the same 6 months is allowed under GST. It should be returned within 6 months from the date of dispatch. Then the sale or approval is not accepted. Then comes delivery challan in case of liquid gas. Then delivery challan in cases other than by way of supply. Idella illama others column. Others column ondale dangerous. It includes all. Then export invoices, GSTR 1E, it should be invoice number, invoice date, port date, shipping bill. You will have to explain this in detail. So there comes 3B. If you have any doubt in one, you can ask me. I will drink water. Give me some time.
The GSTR 1.
Sir.
In case of advocate.
Advocate, yes sir.
Yeah, reverse charge mechanism. Whether I have to give invoice details for the invoice what?
GSTR 1 level, sir. 3B down.
Okay.
It will come in 3B.
Invoice details.
Why not? Don't. Payments made.
Because I am not making any payment.
Huh?
As an advocate, I am not making any payment.
You are not taking any payment. If you are an advocate, you will not register under GST.
Because the export of service I have registered.
Oh, you have registered.
Yeah.
Then you will have to file monthly return. There, in that case, I have not taken that screenshot. There is another box where the GSTR1 says the tax will be paid by the recipient of the services or goods.
That means I will give summary.
No, you have to give invoices there. Because it is for the freight also. GTA also, they will have to report in GSTR1 in that column, where the other party will pay tax.
In case of export of goods, you said port number wise. In case of export of service, that does not arise.
You have to give some proof. The 3B is a document where you are going to report all the sales and deemed provisions. So first column will be outward taxable supplies other than zero rated. Then comes outward taxable supplies, zero rated. Other outward supplies, nil rated, exempted rated. Inward supplies, liable to reverse charge. Then non-GST outward supplies. I will take one by one. A is your regular sales where you collect and pay tax. You will be mentioning that money, total value will be there. Then the portion of indirect tax or central tax or state tax or cess will be given separately. Then comes the outward taxable supplies, zero rated. Zero rated is, it can be an export, it can be a sales to SEZ, or it can be a sales to SEZ developer or deemed export, where a middleman is there and he will get that is what I can say, merchant exporter will be there. Merchant exporter will not have the facility of production. He will purchase and export. For that transaction, 0.25% will be levied as tax, which cannot be claimed elsewhere. It will be to the government. So non-GST outward supplies is petrol sales, then diesel, petrol, or any other things which will not, alcohol, which will not be assessed under GST. For petrol, diesel and alcohol, VAT is the assessing authority, not GST. So for petrol bunk, they will have to file two returns. For petrol and diesel, they will have to go in for VAT. Then oil, grease, etc., they will have to come under GST. They will have to file two returns. You will have to fill all these things and confirm the data. Then supplies made to unregistered person, supplies made to composition taxable person, supplies made to UAN holders in other state. Because all these things will flow to other state. We are not bothered about the money. We cannot get that money, it will go to other state. So you are mentioning it separately. On macro level, the government will weed out these expenses as amount will flow to the respective state. It will not come to me. So I cannot plan this as my revenue. It is a revenue for some other state. Then you have to give the details separately. Composite dealer, etc. Then comes very interesting portion, eligible ITC. In eligible ITC, first one is import of goods. In import of goods, in earlier before 1/7/2017, the importer will be paying customs duty. In addition to that, he will be paying CVD and AED. AED, if they pay AED, they will not pay VAT. If they pay CVD, they will not pay excise duty on the transaction. That concession is passed on to entire importer now. Anybody imports will pay the customs duty. Over and above, the AED and CVD will be calculated as IGST. And the IGST credit will flow to the assessee, provided the state files the return for the IGST. But if you possess the bill of entry, in the bill of entry, the IGST amount will be available. Based on that, you can claim here. Whatever import document you have, if you check the bill of entry, in the bill of entry, customs duty portion and IGST portion will be spelled out separately. You can take that IGST here. Then comes import of services. There also, it is only integrated tax. That is why integrated tax and cess is open. Cess is a levy given for luxury items. For example, if I purchase a Mercedes-Benz car, the rate is 28% plus 14% will be cess for the product. So if I purchase Mercedes-Benz or any other imported cars, I will be paying 42% tax. And more interestingly, under GST, for the year 17-18, for the sale of car, there were 4 assessments. First assessment is between April and June, where the provisions of VAT Act will come into force. From June to 12/10/2017, the cess will be applicable for the second-hand sale also. For example, I have sold my Benz car for 5 lakhs. In that, 42% will go to government. From 12/10 to 24/2, I think, there is another provision. I will have to pay tax on 65% of the value. No cess. 65% of the value, I will have to pay 28% or 18% as the case may be. From February 24, there is another provision which is followed till date is if you have the book value more than the sale value, that is you are selling the car at loss, you need not pay GST. If you are selling the car at profit more than the book value, you will have to pay GST only on the difference, not on the entire value. So it is a very interesting thing and a very reasonable provision. What I can say they should have given is a retrospective effect, but they have not given retrospective effect. So there will be confusion for sale of asset during the year 17-18. This assessment procedure is only for car. Machinery, it is not like this. It is a regular transaction and to be treated as a regular rate. Inward supplies liable to reverse charge other than 1 and 2 above. Then inward supplies from IST. Then all other items. First entry is reverse charge input. That is, the previous month you would have paid tax on the reverse charge. That input will come to you this month first. Then followed by the credit available in IST, Input Service Distributor, where your head office transfers some money to you. You can avail that input second. Next column is a universal column. All other ITC available you can avail. All other ITC includes goods, service, capital goods, then expenses. If I effect an expense, in that also I will get input tax credit. So that input tax credit also I can avail. Then comes inward supplies from IST, all other ITC. Then ITC reversed as per 42 and 43 of the CGST Act. What is 42 and 43? Wherever it is ineligible, you have to reverse. When the output is exempted, when input is taxable, the available input you will have to reverse. And another one is, as per section 17.5 is, you are not eligible to claim input tax credit on the purchase of car, then you are not eligible to claim input on the buildings, etc. Those are blocked credit. It will come under section 17.5. You will have to reduce that input. You have to add that input and reduce. All other ITC you will add, then you reduce that from the ineligible ITC. So you will arrive at the total ITC available, then confirm it. Now from supplier under composition scheme and exempted nil rated. Here we will have a problem because composition dealer is not mentioning in the invoice that he is under the composition scheme. If the turnover of the assessee is below taxable limit, say 20 lakhs, even then he will not charge tax. So I don't know how we can identify the composition dealer and the other dealer. Nil rated you can estimate. You know the exempted purchases, you can total it up and you can put the exempted sales there. Very interesting. When there is a belated payment and belated payment of late fee is for the filing of previous month, you will get that. You have to mention the late fee and the interest. Wherever you are making the belated payment of tax, you are expected to voluntarily disclose and pay interest here. Then comes explanation payment of tax, integrated tax, tax payable and integrated, then integrated tax, central tax, state tax, then cess, then tax paid, etc. And there is an amendment from 1/2/2019. It says you can adjust the IGST only with IGST output and CGST output. For sales tax SGST, state GST, you are no longer allowed to take IGST credit. That means if you are an electrical dealer, if you purchase from interstate, you would have paid 18% to the interstate dealer and IGST. It will be an input for you under IGST, out of which you can adjust only 9% of your local sales, which is CGST portion, and 9% on SGST portion you will have to remit once again. That means you are going to pay 27% tax. By doing this, your net working capital will be blocked and for your information, this provision is stopped for a while. I don't know when it will be released. So central tax you have to give, state tax you have to adjust and give, then reverse charge mechanism, wherever integrated tax or any other tax you will have to give. Then you will have to offset the liability. And the TDS under integrated tax and central tax, state tax, you will have to get it from your Form 2A portion, post it here. Then it will adjust and you make the payment by offsetting the liability. By offsetting the liability is adjusting the input, paying the balance tax. Wherever balance tax is there, you will pay. So by this I have completed 3B also. Time is 5:05. If you permit me for 10 minutes, I will explain GST 2 or GST 4 as per your interest. 4. However, I give this slide to I have already pasted this here. You can take from here, okay? Or I will send it to Surender. You can cut it from me, from him, okay? First person. Composition dealer, you will have to understand the amendment from 1 to 2019. Up to 1 to 2019, a composition dealer engaged in the business will have to deal only with goods. He should not get any income from services. That too, he should not get anything from rent, commercial rent or delivery charges. If he collects delivery charges, it is also income. He should not have service income up to 1 to 2019 from 1/7/2017. From 1 to 2019, he can have 10% of total income as service income or 5 lakh, whichever is more. நம்ம நார்மலாக வந்து இந்த காம்போசிஷன் டீலர்னா அந்த நெய்பர்ஹுட் டீலர் அவங்க பில்லெல்லாம் போட மாட்டாங்க, பில் ஆஃப் சப்ளையும் போட மாட்டாங்க, டாக்ஸபிள் இன்வாய்ஸும் போட மாட்டாங்க. அவங்க எல்லாருக்கும் பக்கத்தில் ஒரு சின்ன கடை இருக்கும், அந்த கடையை வாடகைக்கு விட்டுருப்பாங்க. அந்த கடையில் கமர்ஷியல் ரெண்ட் வரும். அந்த கமர்ஷியல் ரெண்ட் இன்கம் டேக்ஸில் கணக்கு காமிச்சானா இங்கே டேக்ஸ் கட்டணும், ஃபுல் டேக்ஸ். It is a very dangerous provision. See, the dangerous provision will be known only from the date in which it is coming into effect. 1 to 2019 means before 1 to 2019, if you have effected any income by way of service income, you are not eligible to carry the composition slip. Correct? Otherwise, there is an amendment in Form 4 now. There, the service income on column is added. Other than that, the balance you will check now. This is a quarterly return filed by the composition dealer. Mind you, he will not file 3B. Composition dealer will file only quarterly return. He will not file 3B. And generally, he will not pass on the input. He cannot pass on the input. So, whatever he does is B2C. B2C consumed in the state of Tamil Nadu. So, you will have to check the year, quarter for which you are filing the return. Then GSTN number, legal name of the registered person, trade name. What is the difference between legal name and trade name? For example, if assuming that I am a proprietor, my PAN number will be on my individual capacity, right? That is the legal name. Whereas my trade name or business name will be, what is that? Next one. Should be separately given. For example, if you check my PAN number, the fourth letter will be J. Sorry, M. First letter of my letter M. Whereas if you take my firm name, it will be J Murali & Co. First letter will be J. There, first letter will be M. So it will be decided accordingly. Then aggregate turnover in the preceding financial year. Very interesting. Why they are asking this question? Can anyone answer? Because if in the preceding financial year you have exceeded the limit under the composition scheme, you are not eligible to follow composition scheme this year. See how they have placed checks. Existing period, it is VAT and service tax separately taken. Now it is GST. If you are adopting the previous year turnover, I think it may not be correct for the first year. It may be correct for the second year. Because 17-18 is only for 9 months. GST is only for 9 months. The 3 months are VAT. So they are asking for the turnover on the previous year. Then aggregate turnover April to June 2017. That is also reduced. Now the current year is your GST period. So even for the current month, when you fill that 17-18, that is 18-19 year returns, you will be doing the same analogy. Previous year is like that. Inward supplies including supplies on which tax is to be paid on reverse charge. Normally composition dealer will not enter into all these things because so normally it will not have. If there is any inward charges, you have to mention here. And the inward charges will be in the ratio or in the rate of the inverse charge for the goods or service as the case may be. Normally they are paying 0.5% or 1%. If the commodity is 28%, reverse charge is 28%. If it is service, reverse charge is 18%. There it will change. So normally they will not give all these things. Then amendments to details of inward supplies furnished in returns for earlier tax period. This is a wonderful provision. Whatever you have given in the earlier period, and if you want to amend, if you have missed something in the earlier period, you can amend now. Same provision is available in B2B amendment under GSTR 1. For example, now we are in March month, right? During December 2018, I have omitted to include 4 invoices. I can include that in March return and put it in the column amendment of invoices. It will go to that period. Only thing is I have to pay penal interest for that. So my assessee, my clients will get input on that, and I will also comply the provisions within the financial year. And whatever returns filed up to March can be amended or rectified up to September month return for the succeeding year. The omission you can add. Add interest you can add. That too you can do only for 6 months. September month return filed in October 20th, you can amend the transaction, right? Then tax on outward supplies. Here central tax, state tax means CGST, SGST. No IGST will be there. Amendments of outward supplies which is furnished and written earlier. Wherever there is an details, you will have to give the correct rate. Consolidation of advances, advance adjusted. Composition advances form. Then TDS credit received. TDS credit they cannot receive because TDS is only for service generally. Otherwise, it will be paid by the government. The government, when they make the payment, they will deduct TDS. One transaction under composition hypothetically transaction tax payable and paid, integrated tax. Payable and paid integrated tax. He is not allowed to pay interstate transaction. Sales panna mudiyadhu. Column la provide pannirukanga, in future it may come. Currently it is not available. Then central tax, state tax, cess. This is the beauty. Interest nammale calculate pannanom, late fee nammale calculate pannanom. எல்லாத்துக்கும் போட்டு தனியா போட்டு ரீஃபண்ட் கிளைம் இன் எலக்ட்ரானிக் கேஷ் ரிஜிஸ்டர் ஏதாவது இருந்ததுன்னா அது எப்படி வரும்? உங்களுக்கு ரீஃபண்ட்லாம் வராது. இன்புட்டே கிடையாது. டேக்ஸ் பே பண்ணுறது தான். ஒரு சமயம் ரீஃபண்ட் எப்போ வரும்னா போன மாதம் நிறைய கட்டிட்டு இந்த மாதம் அட்ஜஸ்ட் பண்ணலாம். அது ஒண்டி தான் ரீஃபண்ட் வரதுக்கு வாய்ப்பு, வேறு எதுக்கும் இல்லை. debit entries in cash ledger for tax interest payment to be populated after payment of tax. When you file the return or when you make the payment, then only you can file the return. You will have to first submit the return, then it will give OTP, you will have to make the payment. When you make the payment, the OTP will come, with that you can upload the return. So your return process will be completed only when you make the payment. When I payment பண்றேன்னா அதுக்கு ஒரு நம்பர் வரும், அந்த நம்பரை இங்கே டைப் பண்ணணும். Tax paid, cash, interest என்ன பண்ணணும். அதை போட்டுட்டு அதுக்கப்புறம் GSTR4 upload. It should be done by 18th of succeeding month after the end of the quarter. That means 4 returns will be filed for a financial year. And that is other than this is 5th return will be annual return. So as I promised, I have completed 550. If you have any doubts, you can ask me. I will answer your queries. There is no doubts. I will thank you very much for a patient hearing. There is doubt also. I will thank you very much for the patient hearing. Hearing GST return for 3 hours is difficult, and discussing that for 3.5 hours is very difficult. Both have done our work properly. Thank you very much.
On behalf of SARC, on behalf of our participants, we want to
Thank you, sir.